We are gathered here today in the midst of our leaders, eminent personalities, experts and professionals, intellectuals, regulators and operators, benefactors, technology wizards. All stakeholders are present here. We are set to do what we do best, that is, providing and extending financial services to the underbanked and the unbanked.
It is indeed a great honor and privilege to join you in celebrating the 20th anniversary of the National Association of Microfinance Banks in Nigeria, NAMB. This milestone marks 2 decades of resilience, growth, and unwavering commitment to advancing financial inclusion and grassroots economic empowerment in Nigeria.
It is my pleasure to welcome you all to Akwa Ibom State and to declare open this 2025 National Conference of National Association of Microfinance Bank.
So the 64% inclusion that we have is mainly from the agents and mobile money, not from us.
So the microfinance bank is the only reason why we have not lost hope in times of grassroots economic emancipation.
Clients save at the DMBs and borrow from the MFBs, right? Why?
The line between banks, fintechs, payment service providers, microfinance institutions, it's completely blurred. You almost can't tell where one ends and one starts. And the convergence has not been all bad.
There was a lot of ceremony yesterday. Yes, we know. So many ceremony. Because we are celebrating 20 years of our existence. But today, we want to do brainstorming work, want to do technical discussion, want to analyze our sector. There was a little alteration. Dr. Dare presentation that was done yesterday is supposed to be today. But that's part of the intellectual discussion that we ought to have. And we want to believe that probably today we'll also be able to have moment of asking questions. And you know, today is Friday too. By about 1:30 we want to break for Jumat. So we'll manage our time effectively today. The Jumat around lunch period, maybe hello. Maybe we'll give preference when we are queuing for meal or for lunch to our Muslim brothers to have their lunch earlier so that they can quickly have their Jumat. So we manage our timing. But the program today is loaded. Most of us have been wondering about regulation. There have been waiting for the presidents and the presidents. Hello? The president, sirs. Thank you. Thank you, sirs. Thank you. You know, you see a lot of people in black shirt today. But you know, even in heaven, there is order. How do you distinguish the Messiah among them? It is by his cap. So you see that you wear black and black, but your girl, how do you know the president? He's the only man with the black cap. So when you are looking for him, just be looking for that black cap. Welcome, sir, and good morning. We have your blessing to start. Thank you, sir. Without any doubt, from the dossier we released yesterday, you have seen that there have been a lot of changes to the regulators and the operators relationship. There there have been positive development to regulators, operators, support. At least I released so many things yesterday that so many people came to ask us, how did you do it? How can you make NDIC to support you financially? How did you make CBN to support financially? In fact, we did not make them to do anything. They voluntarily did them. That shows you positive development. For the first time in the history of NAM, we have about 60 regulators in our midst. Hey, somebody says, why? Because we don't want to be panicking when we say CBN are coming or NDIC examiners are coming. We want to relax and say our friends are coming. Because once they are coming, we are panicking. That's the truth. Maybe they don't know. We are revealing our secret now. But a situation where we sit together, we speak with them, we discuss our challenges with them, we seek for appointment with them. So when we hear they are coming, we know that now the new CBN, the new NDIC, they have listening ears. Let's give a round of applause to the leadership of these two organizations that are managing our sector. And on that basis, we are starting with a team that is so coincides with our needs. Microfinance banking. I'll take that again. Microfinance banking regulation in Nigeria. Lessons from the past. Opportunities for the future. Please join me in welcoming the Director, OFID, Central Bank, Mr. Sholaja Mohammed Jamil. I'm so sure you want to know a lot about our director. Sir. Mr. Sholaja Mohammed Jami Olayemi is the director of the Other Financial Institution Supervision Department at the Central Bank of Nigeria. Prior to his appointment as the director, he served as the acting director Currency Operations Department, where he pioneered the creation of the branch neutral cash hub, an innovation to reduce the risk and cost borne by banks, merchants, and cash handlers in markets, as well as serve the underbanked. Mr. Sholaja is a seasoned central banker with a career that has spanned the Operations Directorate, Economic Policy Directorate, and now the Financial System Stability Directorate. In his over 3 decades of experience, he has worked in the Currency Operations Department, Foreign Operations Department, and the Reserve Management Department. He's a graduate of economics from the University of Abuja. He holds a Master of Business Administration from the Ogun State University and is an honorable member of the Chartered Institute of Bankers of Nigeria. I present to you our director, Mr. Sholaja Mohammed Jamiu Olayemi.
Thank you very much, distinguished ladies and gentlemen. The President in Council of the National Association of Microfinance Banks in Nigeria, our distinguished stakeholders and participants, our guest speakers, distinguished ladies and gentlemen, good morning. So we are here once again. I'm sure everybody had a very rewarding, very relaxing night. And I'm sure we are coming afresh, and everybody is looking fresh this morning. On that note, just to take it from where the last speaker said, I just stopped in respect of the roles of the regulators and the operators in this subsector. Like he said, we are more interested in collaboration. And as he said, we are not police, and we are neither EFCC nor ICC. So we always like to collaborate with our operators, our colleagues from the other side of the divide, so that we can, as a body, move the industry to the expected pedestal as planned. Without much ado, distinguished ladies and gentlemen, the task before me this morning is to just share some perspective with you on the regulations, supervision, and of course, how we are fed so far, and what we need to do in order to brace up for the challenges of the future. And I will start a bit rudimentary in my approach this morning. Is it projected or it's not projected? So, distinguished ladies and gentlemen, the topic before me this morning is microfinance banking regulations in Nigeria, lesson from the past, and opportunities that are inherent for the future. Now, we are taking it from the growth of microfinance banks in Nigeria. You know, CBN, as a regulator, has found microfinance banking in Nigeria as a critical tool for financial inclusion, poverty alleviation, and of course, economic empowerment. And this is not a brainer at all. It's no brainer at all, because that is exactly what the microfinance banks are expected to do. Like I alluded to as part of my presentation yesterday, I said, out of about 774 local governments in Nigeria, and I'm sure Dr. Ms. Martins even shared some perspective about this in some of the data that she reeled out yesterday, that out of that 774 local governments in Nigeria, it would interest you to know that about 300 do not have, the presence of financial institutions. And to me, this is a challenge for those of us in this subsector. And it's an opportunity for you to quickly go there and tap this opportunity in order to bridge the gap. So, since 2005, Nigeria's microfinance sector expanded as licensed microfinance banks, grew from a paltry 100 institutions to over 835 institutions as we have this as of today, but still growing. But conversely too, we may have to do a lot of rejig in terms of, in order to allow people that are very, very serious to play in this space. It's not, a good thing that we should be carrying large number of institutions, with a very weak, prudential ratios. So microfinance bank provides savings, as you are all aware, insurance to underserved groups like women, youth, and rural communities. So as part of it, CBN recognizes microfinance banks as critical partners in driving financial inclusion, just as I said earlier. So what are we doing in terms of policy and regulatory support? National microfinance policy and regulations enable structured growth and oversight of microfinance sector. I was expecting that this, Mr. Chairman, sir, President, I was expecting that this thing will be projected so that people can get along. We intend to make it more interactive. Okay. So national microfinance policy and regulations enable structured growth and oversight of microfinance sector. CBN remains the primary regulator, as you all are aware, issuing guidelines and supervisory operations manual to ensure that effective service delivery in that subsector maintain an institutional stability and financial inclusion. So I don't think I need to bore you with this, but it's better to go granular because of people that are just joining us at this stage of our microfinance banking in Nigeria. Of course, 20 years, a lot had happened, and a lot is still happening, and more are still going to happen as we tarry along in the future. So, to take you through the evolution of this subsector in Nigeria, which even incidentally coincided with the 20 years anniversary of microfinance banking at the Association of Microfinance Banking in Nigeria, CBN launched the microfinance policy, regulatory and supervisory framework precisely in December 2005. Of course, which formalized the sector by establishing operational standard and licensing tiers by geographical reach and financial capacity to promote sustainability in this subsector. So the CBN, the policy enabled the CBN of Nigeria to implement supervision and ensuring financial stability and sector growth. So evolving policy and best practices microfinance policy has evolved to meet new challenges and integrate global best practice. And that's why you have some, Dr. Mrs. Martin showed in one of the slides that she presented yesterday that even some of the global rating agencies have recognized some of our institutions to the extent that they publish a lot of reports about them, trying to reflect their position and, of course, their penetration in the Nigerian economic space. But I won't mention the names of the institutions. So now we are looking at the regulatory framework and compliance regime. So just like I said, CBN as a regulator, we are always proactive and ensure that we have a very robust regulatory structure that will enable us to effectively and efficiently supervise some of these institutions. It will shock you to find out, even if they deploy all the central bank staff, the entire central bank staff, to monitor the subsector alone, you know what it means? We will be able to cover 835 institutions. So, what to tell you now, what this one tells you is that we have deployed a lot of initiatives in order to ensure that we have effective control of this space, which has to do in terms of technology deployment. So CBN has a very robust monitoring and supervisory mechanism in place. So Nigerian microfinance banking regulations ensure sector stability, transparency, and effectiveness through comprehensive policies and guidelines. So CBN uses the tools that we use. CBN uses on-site and off-site, and of course, risk-based, methodologies in supervising some of these institutions in order to enforce compliance. As of September 2025, just like I said earlier, and of course, we alluded to some of these things yesterday. CBN has over precisely 835 licensed MFBs with consolidated asset base of about 4.4 trillion. You can see how huge this is. So the MFBs comprise of 9 with national license. I think 2 are joined them now. I think we have 11 now. 11 national license category, 105 for state, 292 for unit tier 1 and 430 for unit tier 2 MFBs. So our regulatory framework is equally anchored on several key documents. So we have a lot of tools that we deployed in ensuring that these institutions are effectively controlled. So what are these key regulatory documents? We have the 2005 Microfinance Policy Framework, which formed the foundational policy for formal MFB regulation. So we equally have CBN Act 2007, which provided the legal basis for all the regulations. We're talking about BOFIA and other extant guidelines and manuals. So we have our revised guidelines for MFBs in 2013. So there's a work in progress, and we are reviewing another one that will be presented to all the players in the industry for us to have a concurrence on what we are going to roll out. Equally, we have a 2018 Code of Corporate Governance for MFBs. So set minimum standard for board composition, risk management, and ethical conduct. But it's very unfortunate that a number of us are not complying with this. But it's not going to be business as usual. So we always also have the 2020 CBN circular. Of course, this introduced phased recapitalization deadlines and tiered licensing system to include the rural population, unit tier 1 and tier 2 for rural areas, and unit tier 1 for license for urban and states. So we equally have the 2020 CBN circular, which reviewed the minimum capital requirement for microfinance banks as follows. We have 50 million for tier 2 units. We have 200 million for tier 1 units, as we are all aware. And we have 1 billion for states, and of course, 5 billion for national MFBs. We said 2020, but we have to look at it ourselves. And of course, can this still reflect the reality of today? So it's a food for thought. And it's something to really ponder about and prepare for it. So the banks and other financial institutions, both here, empower CBN to regulate and supervise MFBs. So the 2022 CBN guidelines, a guidance note on AML and CFT for other financial institutions, established comprehensive anti-money laundering and terrorism financing compliance, robust internal controls, customer due diligence, and suspicious transaction reporting. This was to ensure all OFIs align with the money laundering, which is Prevention and Prohibition Act 2022 and international best practice. Of course, if you see what really happened sometime last year and a couple of months back, CBN has shown serious interest, in ensuring that banks comply with their cybersecurity requirements and ensure that no fraud, to a minimal extent, that fraud is controlled in our sector. We had a lot that happened in the conventional bank space that dovetailed and headed passed through some of our institutions. So the idea for us to have a very formidable control mechanism internally to ensure that this does not really happen. Because the resultant effect of this is that apart from having reputational, challenge for the institutions, of course, it comes with a heavy sanction. So we equally have CBN guideline for agent banking and an agent banking relationship 2013 and revised 2023. I'm sure you are aware of the one that we just rolled out about last month, if I'm not mistaken. So there's a reviewed guidelines on agent banking and agent banking relationship. So CBN Consumer Protection 2019 and 2024 ensures fair treatment, transparency, and complaints redress. This cannot be overemphasized. And that is what I said yesterday, that for some of us that run on fintech, and I'm sure eventually all of us will run on fintech. And I'm sure we're even running on fintech already because some of our core banking applications are part of fintech. So it's only given that we try as much as possible to make ourselves more feasible and more amenable to consumers, especially our customers' yearning. Customers should have a form of reporting line whenever there are issues with their transactions. But that is lacking, largely in some of the institutions that we have now. But we are on top of that anyway. So, compliance challenges. So, while several MFBs have evolved alongside the changing economic realities and the regulatory landscape, some others have not been so fortunate as they struggle to stay afloat due to the following. One, capital inadequacies. Like I said earlier, and I'm sure Dr. Mrs. Martin mentioned this yesterday, there's need for us to really brace up. You don't have to be the owner of an institution, and you must never be the chairman forever, and you cannot be an MD forever. So there's need for us to see how we can, if possible, get acquired or maybe merge and make the operations of your institutions more robust so that we can provide the needed, services to this sector. So we have issue with capital inadequacies. Limited capital restrict microfinance banks' ability to meet capital requirements, grow and manage financial shocks effectively, thus affecting sustainability. This cannot be overemphasized. So we have poor infrastructure. It's interesting to know that a large number of some of the institutions are still running on manual, manual operations. So how do you want to compete? How do you now even relay your return to central bank? So there's need for us to look at that. It's either you join them or you get flushed out. So high rate of loan delinquencies. So poor credit administration. And that speaks to the fact that there's need for us to build capacity. Try and engage professionals that can do this job very well for you. So we have high rate of loan delinquency, poor credit rating, underwriting standard and economic instability have negatively impacted the loan portfolio of several MFBs. You can see, I mentioned in one of the slides that I presented yesterday, and the chunk of the loan that we have outside now, even especially non-performing loans, are actually reference to this subsector. And I don't know what you are doing in order to ensure that you embark on an aggressive loan recovery. But we never, Central Bank will never subscribe to a situation whereby you'll be harassing customers with a lot of cyber attacks, or maybe carrying, dog to go and pursue your customers in order to recover loans. I'm sure you expect to have profiled these customers before you even issue out the loans in the first place, so that the business will not go wrong. So we have mission drifts. A lot of people are even trying to chew more than, swallow more than they can chew. So we have mission drift and profit focus. That should not be the underlining, incentive. So we have shifting focus from core microfinance functions, and we have a extant rule for this. I think this ratio is 80-20. That 80 should go to micro loans, 80% should go to micro loans, while 20 should go to MSME. But a number of you have flouted this, and in the months to come, of course, you will hear from us. So, providing insights and strategic direction for the subsector. Why is everybody quiet? Let me remove my glasses so that we can see ourselves. I'm not hiding under the glasses. So, distinguished ladies and gentlemen, let us look at what the regulatory interventions have yielded in the course of our operations. So what are the lessons learned in all of this? Recapitalization importance. In 2018 and 2020, so recapitalization circular raised minimum capital requirement for all MFB categories, leading to sub-sector consolidation and improved stability. So the recapitalization drive has led to mergers and acquisition, which built stronger MFBs and led to exit of weaker institutions, enhancing sector resilience, operational efficiency, improved reputation, and financial stability. I said it earlier. What was the Naira rate to dollar in 2020? And what is the dollar rate to, Naira rate to dollar in terms of exchange? So it's a food for thought. But that notwithstanding, we don't intend to jeopardize our depositors, because that is why we are providing this oversight function for the subsector. So, I'm not envisaging anything, but what is happening in the commercial bank space, we should see it as a signal of what may likely happen. So, need for strong internal controls. This cannot be overemphasized. Internal control, and that's where the board has to do a lot. The board and management has to do a lot. You have to have a very, very strong internal control in such a way that the depositor money that you are holding will not be jeopardized. Nigerians, we already have negative sentiments in the financial sector from the customers. And that's why I found out a number of people are keeping their money under pillow, under cooking pots, and even digging a hole to keep money. And this is not good for us. So let us have an enabling environment that will encourage our customers to want to deal with us, we should make it your what's it called, your operations accessible and friendly to people. But in a situation whereby there's a lot of opaqueness in your operations, it doesn't send good signals to the customers. And what this one tells us is that there's need for us to have, presence in the area where we have customers, provided a desk where people can always lodge, complaints whenever there are issues where there are operations. Okay? So I'm on the slide 14. Slide 14, I said. So I'm going to slide 15 now. Navigating the challenges. Slide 15. Navigating the challenges. Okay, thank you very much. So like I have said, in the course of the presentation, we have persistent challenges remain, and CBN continues to address them through policy. Rising competition, CBN licensing reforms incorporate digital banking and fintech. Our government has been in the forefront of advocacy for digital banking in the last 1.5 years. There is need for us to embed, some of these techniques in our operation so that the operation will be seamless, more transparent, and of course, very smart. So we equally talk about economic volatility, prudential guidelines required, robust risk management, and capital buffers to withstand shocks, inflation, which reach. Yeah, and this brings to mind, I always see that what I've witnessed in the few months that I assumed the leadership of that department is that there's always bandwagon effects in terms of loans. Whenever some institutions see that a particular sector is thriving, everybody run there. And this, what's it called, concentration risk. So I need the for us for diversification so that you can have some level of, comfort in whatever we are doing. So economic volatility, anything can happen today that can even erode the entire capital. So you need to be very, very circumspect. So compliance burden, the CBN's AML and CFT's regulations 2022, and I'm sure we are even doing something in-house in order to improve, to reflect the current realities in the economy. And some of this will be out in a due course. So a new AI-driven, I'm sure I don't know, if I say you should raise your hand up now to tell me if any of your members have attended any AI, programs. I'm sure nobody will raise his hand. And I'm sure you are the only one that have attended. Only the MD. But you leave the operators, and to be learning on the job. But, before this thing stares us in the face, it's already staring off in the face. There's it for us to really embrace it, and that's the way forward. So we talk about CBN AML, CFT regulation, and new AI-driven strict reporting. AI-driven AML standard require MLBs to implement automated compliance system, and of course, strict reporting, enhance regulatory requirements, necessary robust compliance, and that cannot be overemphasized. There's still for us, because how do you integrate? How do you interface with the regulator in terms of rendition of returns if you are not, if your system are not automated? So please, there's still for us to really, brace up and ensure that as the regulator is moving, being proactive, you need to be proactive in order to get along with them. So we talk of portfolio quality. We said this one cannot be overemphasized. We talked about it yesterday. There's it for us to really ensure that our prudential ratios, are in tandem with the requirements of the extant regulations. So agent banking, I said it yesterday, we have circulars on cash in, cash out limit for agent banking transaction in 2024. We set transaction limits and operational standard. Of course, a lot have even happened after this. A lot of regulations are about geofencing and, of course, what's it called? Exclusivity and a couple of other regulatory, actions. So we talked about agents, yes, that's one. So regional gaps. Financial exclusion in Nigeria is highest in the Northwest. Of course, you know this one cannot be overemphasized. And I said it, the large chunk of this number of local governments are mostly in the North. Why we have the highest number in Lagos, especially Southwest. And what is the attraction for this? The POS are competing with the bank. There's a bank here, you find POS in front of the bank, dispensing money. And of course, this is the service. And because that was not the intention. The intention was for you to go and serve the underserved. But unfortunately, you find them in the city centers. So it's an anomaly. So let's go to the next slide. So the future presents significant opportunities. Looking ahead, there are significant prospects for MLBs in Nigeria. So we talk of digital transformation. I don't know. I want to make this thing more interactive. What do you think should be the challenge in embracing this? What is our challenge? Pardon me? Pardon me? But that's why I said, if you know you cannot do it alone, why not seek for help? Merge. So that you can have enough capital available to you. And of course, even expertise, in terms of expertise, some people can support you. If you have people that are very strong in the banking operations, get somebody that is even strong in the technology to support you. But we cannot have it all alone. The era of, I want to have this bank to myself has gone. You have to open up. So we talk of digital transformation. It's no brainer. So there's no way, because with what is happening, there's no way you can fare in the industry without embracing this. So MLBs adopt mobile agent and digital platform. Thus, the sector has witnessed an increase in digital platform through microfinance banks. So only few people are playing in this space. So that the competition can be keen, and of course, can be robust. And we have, what we are witnessing in microfinance banking sector now. Even you recall that you are even doing very well in so many areas in terms of penetration than some banks. If you look at the books of some of the microfinance in banks institutions, they even do far, far better than some banks. But we have to be cautious. Just like I said yesterday, any innovation always comes with its challenges and, of course, its merits. So expanding financial inclusion, this cannot be overemphasized. Despite the progress, being made so far, 26% of Nigerian adults remain financially excluded, especially in rural areas and northern regions. This is very, very true. So CBN Financial Inclusion Agenda presents the vast market for MLBs as the National Financial Inclusion Strategy, NFI's 3.0. Then aims to reduce exclusion below 20% with a focus on women, youth. So these are the major targets. So next slide. So we talk of sustainable financing. We need to go green. But when we are even brown, we have not even succeeded. So how do we now go green? So sustainable finance. And that is the new normal. A lot of people are looking at this, and a lot of opportunity to be tapped from this space. But when even the traditional, microfinance banking, we are still grappling with this. But a lot of people are moving as fast as possible. And that's why it's very, very important in this association. If you want to remain one insoluble entity, there's need for us to bring in fresh people to join us. And that is the feedback I got. Don't be too regimented. Bring in people. Let people come and play with you. The more, the merrier. Please. And we cannot compel anybody to join. By the extent, Constitution of Nigeria is a free association. Am I right? So you can decide to be here. You can decide to be. But it's always good, just like I said yesterday, To be together as a bunch, you form a formidable force rather than standing at the strand, which is breakable. So please, embrace other people, let them join you. Listen to them, don't be too regimented. So regulatory, consumer protection, we talk about that. We can't overemphasize that. And a lot is happening in order to improve our guideline on that. Fair treatment. You can see it's appearing here again. Fair treatment to customers. Fair treatment, please. These people have been doing it, and we are even looking how to those people that have been harassing their customers. When you are giving the loan, you people had a very friendly engagement. But now to recover the loan, when you know that somebody doesn't have the capacity to pay your loan back, why do you have to give out that loan? So the point is not about giving out loan. And because there's a rat race now among some of the institutions trying to see how many customers they can grab. And the incentive on that is using loan to entice people without even looking at how you can recover that loan. I'm sure this one will not be acceptable. And there are some things that we have to put in place from our side. Among it, we have to look at the position of your PAR to ensure that it's in a very, very good position, before we even allow some of your products. And I can tell you for free, before any product is approved for you, it's going to be, you have to come for demonstration. We'll look at it and look at the scope, look at how it's going to impact on your institutions. But those institutions you are holding, it's not yours, so they are central bank institutions, so don't be carried away. So regulatory engagements. This one, and a number of you can allude to this, our doors have been open at every level to ensure that we engage you. We don't believe in sanction. If there are some genuine mistakes that you make, we will correct you. But if there are deliberate mistakes you made, and you made money from it, you must share that money with central bank. I'm not done. Why? I'm sure the person operating this is not from microfinance. So we talk of partnership and innovation. We have said this. CBN regulatory sandbox, where you can expose some of the products that you have, demonstrate it and see how it can fit in. But we are doing that even manually. Come and demonstrate whatever product that you have. Let us assess it and see how workable it is. So the open banking, is this man protesting? So let's go to the next slide. So recommendation and conclusion. Yeah, we told you about adoption of regulatory. Yeah, that is the new normal now. I'm sure, I don't know, and that's why I said, for some of the institutions that we have engaged, it will be out of place for you to expose your programs on capacity building for your staff, for us. Because we cannot afford to leave you behind. Already, we've had a couple of training, and that is in every part of central bank now, especially in the supervisory, directorate, that we must embrace SupTech. Of course, there may be some adjustment to some of the extant, applications that we have now, but in a way, we're already doing that. Paperlite, is part of where we are preaching. And of course, full adoption has been deployed in the last few months. We have a couple of institutions that are calling us that they cannot access it, but we do engage our experts within the department to guide you on how to render your returns through Paperlite. So there's going to be a lot of enhancements to this application, and that's why we have SupTech. So the RegTech is for you. So you need to really up your game. A number of institutions are already, trying to enhance their system in order to, embrace this. Please, gentlemen and ladies, and I'm still saying it, please open up. Let's open up. This industry, there's a large space for us to benefit from. So that is why you will see some running rat race, just like Dr. Mrs. Martin said yesterday. Traditional and fintech, they must work together. even banks, they were afraid of fintech, but they don't have a choice. They have to embrace it. Because you can see that the fintech-driven microfinance banks are more, if you can see the rates that they are penetrating the entire space, is very, very scary. So there's still for us to really, let us be the one to break this, to break the space, by ensuring that we cover the entire space, because they are more interested in corporate and all this, consumer investment. So, but for us that are interfacing with the people, and these people form the almost 65% of the Nigeria economy, this the informal sector. And that's where the opportunities are. And that's why you see government over the years have deployed a lot of incentive, in order to ignite activities in this sector. So there's need for us to tap this, You can see what the Honorable Commissioner said yesterday. Most of the activities of the state government transactions pass through their own microfinance banks. And there's no way some of you will not benefit from it. If it is too large for that particular, their own state MLB to handle, they will engage you. So you need to open up. So capacity building, and using RegTech, and so that's what is there. So capacity building, staff training, we said that cannot be overemphasized. So customer-centric, we talk about product that are very, very, you have to assess the customers and your target audience and see the products that can best serve them. Not imposing anything on them, and not imposing on them, not even exposing it to them in order to cheat them. Please, let them have understanding of the product you are giving them. They must have adequate information about the product that you are giving them. It's just like, normal manufacturing sector. If you introduce any product, you must do a lot of advertisements, a lot of awareness, so that people can know on how to benefit from that particular product. So the same thing goes for this service. So responsible lending, we said it. Your credit underwriting. So there's need for you to do proper profiling, and of course, KYC. All these things has to be. But of course, there's always a need for us to ensure that we do proper KYC of our customers, especially those ones that we are giving loan to. So next slide. Policy dialogue. I said it, that we need to be collaborating. Already we are doing that. The Secretary of the Association has said it, that we are not police, and of course we don't intend to be police or EFCC. So it's better we judge rather than war. So we talk of strengthening internal controls. We said this. We need to do that. Embrace digitalization. That cannot be overemphasized. No, next slide. So growth and regulations. Over the last 2 decades, we shown out the number that we have a 35. But how much of these 35 are solvents? So that's the question we have to ask ourselves. So like I said yesterday, if you cannot join the Molue, then you have to find your way elsewhere. Go and do a susu, jeje. Go to the market, be collecting money in susu and doing that. So that's where we are. So challenges faced. So challenges like capital adequacy, inadequacy, compliance issues, infrastructures. Yeah, those are some of the things we are trying to straighten out. Future potentials. By learning from past operational errors, regulatory reviews, and of course, it's a work in progress. So as we paddle along, all the mistakes of the past we put behind us. So we started reforms and enhanced compliance. MLB can become powerful engines of inclusive growth, and I'm sure you're already playing that role. So next slide. So the next slide is the end. So thank you. And on the final note, if there's any question, please, in just 2 minutes, you have the opportunity of asking questions, and I have other people. If I cannot do it, my other colleagues that are very, very deep-rooted are here. So thank you very much, distinguished ladies and gentlemen.
So are we allowed to make comments or questions only?
Sir?
Are we allowed to make comments or just questions?
Make comments.
Okay. Thank you very much, sir. I think it's always a privilege to hear a director of OFISD or indeed any of our regulators hit it directly on the nail, sir. My first comment, sir, is the first thing I heard is that we should not attack our loan defaulters. I want to say that so far it's been said and everybody agrees that the collaboration between us and the CBN has continued to improve. But sir, you don't beat a child and tell him not to cry. The CBN should place more emphasis on protecting the sector rather than protecting the depositor. Because in a country where institutions that are supposed to protect us are failing, then we must fight for survival. Before, when somebody borrows from you and doesn't pay, you can go to court. We know today that the judiciary is no longer a strong place you can rely on to go and fight your defaulter. Somebody has borrowed from me and gone to court to say he's not owing. So he won the case. That's the truth. So all I'm saying is, if somebody takes money from you, and what I need to do to collect my money back is to put a rope on his neck, please look the other way and allow me recover the money. It's regulators to obey the rules, but don't regulate how we collect our money because people are wicked. That's number one, sir. It's not about clapping, please. Don't make it look. The second thing, sir, is Mrs. Martins made it very clear, and I align myself totally, that what will work is a marriage, very strong collaboration between the fintechs and the microfinance practitioners. Microfinance is built on 11 solid principles. Somebody who has just technology cannot do microfinance. People jumped into this space because they have technical solutions that can enable payments. A payment system is not a lending system. So what happened? I beg you, sir, please don't clap. What happened where you were seeing those emails that tell somebody, probably somebody's obituary because he's owing money and all those unprofessional things, I can bet that they were not licensed microfinance banks, but people who jumped into fintech and did not follow any of the 11 stated principles of microfinance. Technology is a tool that we can use to render service. If anybody needs a payment service banking license, let him go and get it. Where people do not have 5 billion naira to go for PSB license and they now jump into microfinance because they can get a unit license and they begin to do payment services is not helping our sector. So we must be clear that anybody who wants to bring technology should look for a microfinance bank that has the microfinance principles and is doing microfinance and support the person with technology. And that is where the regulator comes in. A situation where somebody who just has the technology goes to take a license and begin to provide microfinance is not helping the sector. Regulation has helped this sector. Trust me, if we didn't have regulation the way we've had it, many of us would have gone. So regulation is key, is critical, but I think that regulation should come strongly to ensure that technology, digital technology should be an enabler. It should not take over microfinance because microfinance has its principles. And any time that those principles are stepped on, it affects us. I was very shocked yesterday, and when you said that about 300 and something local governments that did not have any financial institution, it's true. I've been to a local government, to a place in, to consult a place in Plateau, where within 3 local governments, there's not even a microfinance bank. But the CBN brought out NISAL and said that they will open a branch in every local government. How many years after we still have 300 or something? Is it that NISAL has chosen to do business where only there is money? Or are they supposed to serve Nigerians in everywhere they are? It is the CBN that should enforce it and make it happen. So, truth, sir, is you have made very valuable suggestions, and I want to assure you that many of us here are in this business to make the sector work. We will continue to collaborate with the CBN to make it happen. Please, you need to protect the sector from people who want to come from outside, because it looks like that is where we have the easy entry. There are no entry barriers. So they jump in and they're going to take us. If things continue the way we are, traditional microfinance banks may just phase away, and people who have nothing but technology will come in. Our customers will lose the touch that they are supposed to have. Our customers will lose impact. People will only offer credit, but not offer the impact that comes with it. I think that the lecture has been very, very touchy. It has hit so many points, but I think we have a lot more collaborative areas to do. Thank you very much, sir.
Thank you very much, distinguished ladies and gentlemen. Let me just quickly recognize the Executive Director from NIPS, Mrs. Yembe, who has just joined us. Madam, you know, when I saw you coming, you have a very striking semblance with my sister, Dr. Jumoke Oduwole. I was telling the secretary that, look at the minister coming. Maybe ministerial appointment is beckoning. So thank you very much, distinguished ladies and gentlemen. My immediate past president, am I right? IPP. Yeah, your concerns are taken. But let me just tell you, sir, we are regulators. We are providing supervisory oversight for the institutions. But the primary goal is to protect the customers. If you kill our customer, if you as a bank B kill the customer and decide to, well, how will bank A get customer tomorrow? So that means by the time you start reducing them one by one, you move from that locality. On a more serious note, let me just tell you, you cannot, and Central Bank will never tolerate that. You cannot. Just take it. If you have been doing this, in fact, I will send a special task force to your bank to come and see how you have been recovering the loan. If there's any complaints or reports that you have harassed your customers, we will personally take it up ourselves. But that's just by the way. It's on a lighter note. The second issue is the area of fintech. I'm sure you are very much familiar with the nature of licenses that these people obtain from Central Bank and other regulatory authorities. We are aware we have mobile money operators and a number of other licenses. And you know those permissible activities for each of the licenses. Am I right? You know MMO is not supposed to create any loan. Am I right? So if anyone that is creating loan, please report to Central Bank. And what most of them have done, very smart, is that they come with a very strong, technology savvy background, You people go and sell your microfinance to them. Am I lying? You sell it to them, unit 2, you sell it to them, 50 million. And somebody is carrying out, activities over 1 trillion turnover. You are the one that is pushing yourself. But on the most serious, that traditional, we are no longer a community bank, It's not a susu again. So you have to wake up, brace up, you have to join them. So it's just like telling, it's an announcement, it's a development in the financial sector. And we cannot afford to be lagging behind. You are just telling me the conventional banks now, they are doing a lot of things, a lot of new products that will reflect the reality of the day. So you can't say you have to guide your space. It can't work. Sir, embrace technology. Oh. You just have to embrace technology. And even these loans, like I told you, you can't be pursuing the people that are the loan defaulters from on the street. When you are doing their underwriting, when you are profiling them, have you assessed them to know that they have the capacity and capabilities to pay? Excuse me. No. Don't let us chorus. We are not chorusing here. What I'm saying essentially is that, sir, and what most of you do, no. We are not even talking about that, and we are going to talk about that. Your, what's it called? The rates regime is cleaning. You put 60%. But the fact is that we are doing a lot of things from the regulation side to ensure that you are protected in terms of loan recovery. We are trying to onboard you on the consumer, what do they call it? CRMS, and of course, so that you'll be able to, invoke the instrument of GSI to recover your loan. Very soon it will come out. But you have to play by the rule. You need to play by the rule, be more responsible in your lending, activities, and ensure that you do the right thing. So, sir, no community banking, no community banking. So that's why it's being regulated. So, quick one.
Okay, a quick one, please.
NASA, don't worry. NASA is on his own. No, just NASA is on his own. It's been regulated just like any other bank. Forget about us that happened in the past.
We hear you.
NASA, the same checklist that we deploy in regulating other institutions is the same we deploy while regulating NASA. So there's no babies, no CBN has no baby, no affiliate, no affiliation. So they are standing alone. And in due course, you will see what will happen.
Okay.
Are you okay now with NASA? You want to take over NASA?
Okay, thank you. My contribution is on two things. One, we all know that banking is a very serious business.
Can you speak up, sir?
Say what?
Speak up.
Yeah. Banking is a very serious business, and you need a lot of capital and serious funding to do what you're expected to do. Now, from the beginning, 2005, we know there's a special fund, SME fund, 220 billion, that has been set aside to support us to do what we're supposed to do efficiently. But from the last count that we had, less than 5% of that has been accessed by our members. And even those that have accessed it are the ones at the top, the national banks, okay, with the national license. Maybe if we can relax the conditions to access that, it will be good for us, for the system. And I think it's where we access funds from you and you give us conditions on how to utilize the funds that will make compliance even easier for us, because you will be constantly checking on how we utilize your funds. That is one. Two, the gap between state and national license is huge. So I was wondering, why can't we introduce regional license to fill that gap? Because a lot of banks in state level, they have funds that they want to grow, but they cannot grow to that height of national. So if we have a regional, maybe we would say 3 billion minimum share capital, at least that will go a long way. A lot of us can play within a region, not only restricted to a state. So if we can introduce that regional license, I think it will greatly assist us in growth. Thank you very much.
Yeah, quick one. Thank you very much. You were talking about the seed fund, SME fund, am I right? The one that you have, I'll be able to manage it. Even the deposit that you have. How have you been able to manage it? So you have to look at that. The second one that you talked about, in charge of a regional license, even those of you that have tier 2 license, and for UK, in the next few months, we are going to go on aggressive, monitoring. For those of you that are, operating outside the scope of the license you are holding, it's either you upgrade to the level of your coverage or you surrender your license. That is no-brainer. Because we've been engaging some of them that we noticed that in their balance sheet, they have shareholders fund in excess of 10 billion. And look at what you are carrying, the liabilities you are carrying, and the huge fund that you are carrying. And you have just 50 million license. Somebody have about 10 billion, 20 billion, and you are carrying just 50 million license. Where is that one done? So it's no-brainer. You need to upgrade to the level to cover the scope of the license you are holding. So just expect us. We are going out massively to ensure that your activities are restricted to the scope of the license you are holding. So your issue has been addressed. That SME, no intervention. Forget about it. It's at the discretion of your CRR, has it been effective? So nobody is asking you about that. And banks are paying heavily. They are making a lot of, positioning for CRR. So please, don't let us expose ourselves. Thank you very much. President, that man.
Hello.
That man in Agbada.
Okay, so my name is Dr. Chris, and I'm from Grumi. My questions are, flowing from the presentation, you did mention that some years ago, like 2005, the value of dollar to naira now had significantly changed. And on that basis, there will be need for recapitalization, which is cool.
Are you the one propagating that?
No, sir.
I've not said that.
No. I'm just saying. Okay, so that it was more of a justification that the recent recapitalization that has happened followed that trend. But something that has happened is also that at the time of classifying 80-20% in terms of micro to macro loan, the values were like that. But today, the value of the currency had greatly been eroded. And yet we are still being examined to say you must stick. So I'm also thinking that although we've made several submissions as to the need for this recalibration of what micro loan means to what a macro loan could mean in our present day economic terms. So I appeal to you that you help us look at it. Some years ago, my people would say, I was so small when I started hearing some stories like MFBs will soon start and will soon be onboarded on the GSI because it is one effective tool that we can use. I align with your submission that we have to go digital, we have to be fair in terms of recovery. But in a situation whereby the digital platform or the platform that will enable us do that recovery, we are not being onboarded. It's a disadvantage. So my appeal to you is not more of a question, is that if you can give it to us as a gift, that come the next NAMS annual conference, which is just in another 1 year, that the platform will be ready for us, that we can be onboarded on the GSI. That will be a great one. The last one is that yesterday when the announcement or the discussion was that in Akwa Ibom, or here, that the state bank, microfinance bank, has been enabled to do businesses with all the staff. A colleague of mine just shifted and said, I'm sure there would have been some level of adjustment because we're not expected to do government business or something. And I'm asking, if we are the banks in the local government, and the local government cannot pay the local government staff through or salaries through the local government bank. That means we still compel the local government staff to collect salary in those 300 local government and travel to the state headquarters to withdraw their money. I'm appealing, sir. Times are changing. If we are being seen to participate in the financial system, we should be given a playing field. It might not.
So thank you very much, sir. Let me quickly, if I can, if my memory doesn't, fail me. You made mention about the need for you to, sorry, can you just take it again? Sorry. Just, oh, GSI. Now, that is the most critical of all the questions that you've asked. But there is something that we need to do. There must be right behavior. There must be right behavior in the subsector. If I ask you, now if I look at your bank now, you see all the requisite prudential ratios, are they in tandem with the regulators' requirements? Those are the areas. Your automation, are you up to standard in terms of your automation? In such a way, no, it's not, don't answer chorously. You only know about yourself. And if you dare me, I'll ask people to come and examine your bank tomorrow, on Monday, and see. It's not a threat. Because you see, you cannot be preaching what you are not. Don't let us pretend. Even some of the most sophisticated of all of you still have all these challenges. So how do you play when you don't have all the requisite all the requisite application in place in order to integrate and play in the financial space? How do you get even the GSI? How will you even invoke it? How transparent are your operations? We are still running after you to ensure that you comply with all the regulation, prudential ratios. Now, how can any bank trust you to transact business with you? Tell me the name of your bank and come and tell me. Come and tell me. So what I'm saying in essence is that there must be a very transparent activities in your operations, and of course, you must have the requisite application in place in order to play in the financial ecosystem. So, even the GSI, a number of you will have challenges in implementing it. Because if you don't have all these things in place, there's no way you can invoke it. And we will not even onboard you in the first place. So please, get prepared. It's only people that are playing by the rules that we will we're on board. Then you talk about the issue of local governments, the state government. Yes, what the regulation says is that, and we are going to implement that the ownership structure they are talking about, and the time grace for divestment from the institutions. I'll find out, I'll run it through my colleagues. I'm not too sure whether there's any restriction on local government's official placing fund with you. If it's within that locality. So there's no issue with that. Then there's other one that you mentioned. Yes. My brother, exchange rate has not to do with are we talking of value or volume? Value. Don't worry. Something is in the pipeline. Don't go and bust the pipeline, no. Something is in the pipeline on that. We're even trying to increase the ratio to a manageable, threshold. No, let's go on. No problem. No problem.
Hello? Okay. Thank you, Director. My comment would be to your presentation. And I would also like to toe the line of the former speaker concerning the fact that if you look at recent events and development in the economy, you will see that they have far outlived our present regulation. And that is also to speak to the loan to deposit ratio and the loan composition, which the former speaker alluded to. But one area that I would like to speak on is on the issue of PAR, which as microfinance bank, we play in the most vulnerable space. And our PAR is, I think, the same with that of the commercial banks, 5%. So, and if you look at this space, the commercial banks run away from this space. But the microfinance bank has the responsibility to penetrate this area. So we think that considering the present regulations, that the central bank can, in order to help the microfinance subsector, improve the PAR rate, you know, to be able to contain the fact that we play in the most vulnerable space and that we should be allowed some level of comfort while we also would ensure that we ensure aggressive recovery of the loans that we give out. So that's just my submission, sir.
Thank you very much.
Thank you, Mr. Presenter. I'd like to...
Sorry. The seated participants, let us seize the opportunity to welcome the distinguished Senator of the Federal Republic of Nigeria, a friend to my friend, Femi Adefila, and our distinguished Senator of the Federal Republic of Nigeria, Barrister Ajibola Bashir. Actually, it was built to be here yesterday, but I'm sure maybe because of some of the engagements. The association has confirmed to me that he has been a very, very staunch supporter of the subsector and the association. And of course, really, in fact, we never knew you can even make it to Uyo because of the activities that you are saddled with. So welcome, Mr. Barrister Ajibola. Welcome, sir. So, in order to go to meanwhile, let me just inform the participants. The COMBIM is coming up so I think it's in about few weeks' time, where you'll be able to air your views on some of these issues. This particular platform is formed for that. We are here to celebrate 20 years anniversary of a microfinance bank in Nigeria. But without prejudice to the last speaker, you are just trying to reinvent the wheel. And I can see your MD trying to pinch you, but don't say anything, please sit down. Don't put us in any jeopardy. But on a more serious note, the issue of PAR, CBN has not been saying anything about the rate you charge for loans. Am I right? So something has to give. It's either we make you to use the anchor rate, the corridor around the anchor rate, which is the MPR rate, just like the conventional banks, and guide it jealously, and of course losing up from those other areas. But because of, if all those controls are put in your subsector, the accessibility, the main essence of even microfinance banking will be defeated. So we don't want to put any strict, but meanwhile, we are looking at the tenor of loan write-off, vis-a-vis that of the bank. We look at that. Of course, it's something we have been conversation around with my colleagues. But for you, you have to take one. And I'm sure the recommendation must come from the association, not from one bank. So on that note, gentlemen and ladies, so I think our time is fast spent. So let us document all other concerns and wait for the COMBIM. So distinguished ladies and gentlemen, good afternoon. Or is it noon? It's morning.
Thank you, sir. Sir, we still need, if you don't mind, we still want to poll with you here. Things are changing for better. You can see the very insightful and interactive presentation by our director. We thank you very, very much, sir. And we appreciate the insightful presentation. These slides will be shared. Oh, I've also been told that it's been shared. You can check the platform, the participant platform. You have the slide there. There's a way we want to just give a token to, of our appreciation to all our speakers. And we will be presenting a little plug to say thank you to our director. And to do it, it's one lady that we have been looking for, or we have been looking forward to receiving since yesterday. Today, every second, everybody feels the impact of NIPS. There's no way you do transfer without NIPS. This program has made us to see who and who are behind those magic hands. They said in South Africa, when you do a transfer to another bank, they receive it the next day. I'm saying it with all confirmation. But in Nigeria, when you do it, pam, pam, it gets there, pam, pam, within the same seconds. No other country in Africa has this kind of infrastructure. I am saying it with all authority. Nobody then say. We thank the CBN and we thank NIPS. Madam, it's power to power now. We want you to assist us to present our award to the director. Director, please. And they will be inviting Mrs. Ngova Ihiembe Nwako, the Executive Director, Business Development at NIPS, to do the presentation.
I'm actually waiting for her, the Secretary. I'm actually waiting for her to confirm that NIPS is power to CBN.
My very first meeting with director was a hot meeting. So I was very happy when I heard him also delivering his paper in the same style. He really is awesome. The passion that he displays for the sector, for governance, for compliance. I'm really, really quite excited. And I'm so happy that he was able to make this. I think I was speaking to the coordinators about a month ago, and we both agreed that he had to be here. So I'm so grateful, sir, that you made it. And on behalf of, please, team, come and receive it with him so we can also congratulate you. Excellent. No, we'll have you on that side. So all of you are supporting him. And I will read this. So on behalf of the National Association of Microfinance Banks, they are providing this award of excellence to you, sir. Director Sulaja Mohammed Jamiu, Director OFISD, Central Bank of Nigeria, in recognition of your outstanding contributions to the growth and sustainability of microfinance banking during the 20th anniversary of the Microfinance Banking Conference. Congratulations, sir, and thank you.
Thank you very much. I feel highly honored, of course, privileged to be part of this success. And even in the political structure, and I'm sure the distinguished senator can attest to this, a tree does not make a forest. And that's why you see Senator going to Oshogbo, Osho State, almost every other week in order to bond with his constituents. So, in the same vein, there's nothing I can do without my colleagues, backing me. It's a teamwork. And that's why I always refer to myself, anytime we hold meetings, whenever we have institutions coming to visit us, I refer myself as a team lead. I'm not a director, but a team lead. So thank you very much, and have a very wonderful session. Thank you.
Join me again to say thank you to our team lead. Director has told us now that we can address him as team lead. I born you do it. Can you call him team lead? But because I have the mic today, I can do. After now, I won't do it, sir. I won't do it again after I leave here. We appreciate you for those insightful presentations. I must say, our member banks have already received your presentation on our platform. And you can be rest assured that by the time you do your assessment of us again, we'll keep improving and you'll be proud of us. We only continue to plead that just continue to accommodate us as much as possible. We'll keep on changing. Is that not? We'll keep on changing. Thank you, sirs. We want to, again, recognize the presence of the senator with us. You keep on asking us, are we so privileged for Senator Dr. Barrister Bashir Jibola to always stand with us or by us all these years? We have been privileged. That shows that our sector is being recognized and supported even by those in governance of this nation. Please join me in welcoming the APC National Secretary, Senator Dr. Barrister Bashir Jibola. Thank you very much, sir, for being there again. He was with us in Ogere, and he stood all day with us. He was with us all day. And today, again, he's again with us. Thank you, sir. Thank you, sir. I know you are anxious to hear from him. He won't talk about 2027, don't worry. He will only challenge our sector, don't worry. We have the Managing Director of NDIC paper to be delivered by Director Seed, our one and only Mrs. Adaora Ezeife. Paper is entitled Managing Risk in Microfinance Banking, Impacts and Challenges of 2 decades of deposit insurance for microfinance clients. To present this paper is a Managing Director of NDIC, Mr. Thompson Oludare Sunday, who is being represented here today by Mrs. Adaura Izefe, Director of SIID. Ma, you have our attention. Want to get to know the director and the director of NDIC. Is a seasoned and versatile financial expert with over 30 years of regulatory and supervisory experience. Mr. Thompson, having cut his teeth with the Central Bank of Nigeria in 1989, went ahead to acquire high-end knowledge in central banking, spending 20 unbroken years in banking supervision. While his vast experience is in the regulation and supervision of licensed institutions, his deep expertise span corporate governance, risk management, and compliance as veritable tool for ensuring the safety and soundness of institutions. Mr. Thompson is a highly analytical and cross-functional team worker with strong interest in building individual and institutional capacity for transformation and excellence. Thompson was appointed the Managing Director, Chief Executive Officer of Nigeria Deposit Insurance Corporation, NDIC, on July 8, 2025, following his nomination by His Excellency President Bola Ahmed Tinubu, GCFR, and his confirmation by the Senate. He graduated with first-class honors in business administration, finance from the reputable ABU, Ahmadu Bello University, Zaria, in 1985. Swiftly went ahead to cap his academic pursuit with a Master of Business Administration from the same university in 1988, and later a doctorate degree in management from the St. Clement University in the UK in 2009. I present to you Dr. Thompson Oludare Sunday.
Good morning. I will ask you to look beyond this figure here and see Dr. Thompson, the Managing Director of the Nigeria Deposit Insurance Corporation, the President of the National Association of Microfinance Banks in Nigeria, distinguished representatives of the Central Bank of Nigeria, and the past executives of the CBN, my colleagues from the NDIC, special recognition to our zonal controllers from Bauchi and from Kano. The executives of Akwa Ibom State Government and our distinguished Senator of the Federal Republic of Nigeria, the Executive Director of NIBS, the past leaders of NAMP, the Managing Directors of the microfinance banks here, gentlemen of the press, ladies and gentlemen. It is indeed an honor and privilege to stand before you today, representing Mr. Thompson, Dr. Thompson Oludare Sunday, the Managing Director of the Nigeria Deposit Insurance Corporation, a seasoned professional in the financial safety net management. My own name is Adora Ezeife. I am Director, Special Insured Institutions Department of NDIC, and I am delighted to stand in for my MD on this special occasion of the 20th anniversary of NAMP. The occasion of this 20th anniversary is very remarkable. It is a milestone, one that calls for both celebration and reflection. This paper is titled, well, the paper has been shared. I'm sure it's already in your email, so whether you're seeing it here, you can read from your mail. It is titled, Managing Risk in Microfinance Banking, Impacts and Challenges of 2 decades of deposit insurance for microfinance clients. Because the paper has been distributed to your emails, I will highlight the key points for the purpose of this presentation, focusing on the progress made, the risk in operations, and the way forward for a resilient and inclusive microfinance industry. We have been told, or we are aware, that microfinance banking emerged since 2005, and we're celebrating its 20 years in 2025. It was created, established to combat financial exclusion, to alleviate poverty, provide finance to the economically active poor, expand access to credit to the micro, small, and medium enterprises. Deposit insurance scheme, on the other hand, was established to promote public confidence, protect depositors, and contribute to the financial stability of the financial system. At the inception of the deposit insurance system in Nigeria in 1989, the coverage level was fixed at 50,000 naira. That amount at that time was able to cover 85% of total deposits in the banking industry. NDIC, as part of Safety Net, plays a critical role in managing risk with deposit-taking institutions. It is designed to protect depositors, prevent bank failures, and promote financial stability. In 2006, the deposit insurance scheme was extended to microfinance clients with a coverage limit of 100,000 naira. And in 2010, it was increased to 200,000 naira per client, per depositor. The NDIC coverage limit is continuously reviewed to reflect the economic realities of the time. The most recent review in 2024 resulted to a coverage limit of 2 million. I thought we were going to clap for NDIC. And that 2 million from the survey carried out by the NDIC covers 99.27% of the total number of depositors in the sector. So what we are saying is that from the survey that we carried, about 99.27 clients or depositors, they have just 2 million or below. And that is how we fix the coverage limits. That portrays the NDIC commitment to the depositors. What are the impacts of this deposit insurance scheme in the microfinance bank subsector? The number one is deposit guarantee. So we educate the clients, the microfinance bank sectors, that their money is secured. In the event of a failure, if you have 2 million or less, your money, you're guaranteed. However, we are also we're also mindful of the moral hazards. We're not going to say that the operators here, because 99% of your clients are protected, then you can run the bank anyhow. The protection, deposit insurance protection, also reduces anxiety and panic withdrawals. Because if two microfinance banks are on one street and one closes shop, the confidence that NDIC protects the deposit will not cause a panic or a run in the next microfinance bank. The scheme also reinforces trust in the safety of funds placed in MFBs. Nationwide financial literacy, you can see our booth. We keep doing campaigns to enforce awareness of this scheme among the ordinary citizens of Nigeria, to make them, encourage them to bring money into this sector. The idea of the scheme is actually to protect the low-income depositors, the vulnerable, the uninformed, and the bottom of the pyramid. Currently, like the director has told you, over 835 microfinance banks are insured by the NDIC. Now, what are the risks? It cannot be emphasized because the director of OFIDS enumerated the several risks that we see in the process of our supervision. Top on this is the credit risk. The gentleman is asking for the par ratio to be raised, maybe to 30% or, well, credit risk is critical. Operational risk, weak internal controls and governance structures, a lot of fraud, insider abuses, poor record keeping. These are part of the issues that we see when we go to the bank. There's also liquidity risk because of the mismatch of funds. We understand that, okay, you have all said it, that you don't have access to stable funds. So most of the operators, they rely on the small deposits and from the clients that they see. So they are not able to match their funds, their deposits to the kind of credit they want to treat in their books. There's also the governance risk. We have a lot of weak board oversight. There is also limited managerial competencies. We see a lot of turnover of key personnel of these microfinance banks. Because, you know, in Nigeria, the person that spoke yesterday, Dr. Dare, told us how everybody wants to migrate to the city. So even during our supervision, we use that as a platform to also train the operators, you know, knowing that these challenges that they have. There is also growing prudential requirements. This is risk. There you see a lot of conversation when the director office was presenting his paper, and that is regulation has to be there. Otherwise, even the sector will not sit, everything will fly away. Then, what are the risk mitigations that the NDIC and even CBN, because we collaborate a lot, what are our measures to mitigate these risks? The one which he mentioned too is the development of the Code of Corporate Governance that prescribes acceptable standards for the board and management. We also do risk-based supervision. So when we come into the bank, what we focus now is on the risk areas. We don't do compliance. Not that we don't mind compliance, but we focus more now on what constitutes the highest risk in the bank. you render monthly returns. So with that, we do a lot of monitoring. We call it off-site surveillance. So when you submit those returns, we use it to do continuous monitoring of your reports. It helps us to detect the early warning signs of banks that are already going south. Then the implementation of the differential premium assessment system. Initially, at inception of the NDIC, we were doing what we call the straight line method. So we use the same rate to work out the premium that will be paid by all the banks. But at the time, through this kind of fora that we'll be having, we found out, no, how do we encourage the banks, the institutions that manage their risks better? So if you have good risk management system in your bank, you're most likely to pay a lesser premium. Then we have what we call the prompt corrective actions. During the monitoring, the periodic monitoring that we do in the bank, when we find that there is a bank that is showing signs of weakness, we can enforce some actions on that bank. We may remove the board and management of the bank. We may ask you to stop writing more loans. We may ask you to go on aggressive recovery so that we can save the institution. Okay, top on this list of our mitigation measures is a lot of collaboration and partnership. And that is why we're all here. The CBN, the NDIC, and we want to collaborate very well with the association, the NAMB. You know, it is through you that we get to the grassroots of these, your clients. We do a lot of capacity building. Only this year, the NDIC has trained about 200 MDs of banks. We did the first run in Ibadan, we did in Lagos, we did in Abuja, and we did in Enugu. We invited, for each of those training, we invited about 50 MDs or senior management of the banks, and we teach them the practices of corporate governance, credit underwriting standards, and we do this with the funds of NDIC, because most times the operators have been asking us, what do you do with the money that we pay? What do you do with that premium? But we are about 18 NDIC staff here. We have our booth there. We have our publications there. So any event that we have, even at trade fairs, any opportunity we have, you use it to educate your clients, encourage them to bring money into the banking system, because NDIC is there to protect their fund. We have to continue to do a lot of collaboration and partnership. It is very, very critical. The Director Office emphasized it. The NAMB executive emphasized it. And what I am saying, adding to those emphases, is that this collaboration, they have to be intentional. They have to be structured. We need a very structured coordination. We need to share intelligence, do joint capacity building, align communication, especially in the areas of organizing joint training programs for the operators to improve risk management and governance practices. We need to collaborate on nationwide financial literacy campaigns. NDIC, we do a lot of it. You may not believe it, but we have just started campaigns. We go into the markets. We meet the market association leaders, women groups in the market, mechanic workshops. We gather them through the association. And we have a department that go from time to time to lecture and encourage them to bring money to the financial system, to the microfinance sector in particular. And I assure them that their money is protected. You know, we also need to strengthen the cybersecurity is a huge risk. And we're saying that, Director Office mentioned it, you will not be able to do it alone because it is expensive. So we need to collaborate with one another, partner with one another to see how we can strengthen us, because there's a lot of fraud in fintech operation. You render return on fraud and forgeries, and we see sometimes it is too huge. And apart from your return on fraud and forgeries, we receive a lot of complaints, a lot of petitions from your clients. So what is the way going forward? Our priority areas for NDIC is that we're going to continue to strengthen the risk-based supervision that we do in collaboration with the CBN. We're going to enhance digital risk management framework. When I was going through those booths there, and I saw RegTech, and I went to them and I said, what do you do here? So, these, we need to, it is not just only the operators that are going digital. Even we as regulators, we have found the need now to also do regulatory technology and supervisory technology. We will continue to review the deposit insurance coverage to reflect the market realities. We will deepen financial literacy and consumer protection, particularly in the rural and underserved communities. We expand collaboration with all the safety net agencies, especially NAMB. NAMB, we want you to come closer. Do not be afraid of regulators. We need you to reach these underserved people and sustain capacity building for operators. Every year, we map out a budget. NDIC maps out budgets to continue to train the operators. You do not train them, this NDIC will use. So when we ask you to pay premium, please, you have to willingly pay, because we do a lot. We don't get subvention from any government. It is with that premium, the interest yield, that we pay our salary and run all these expenses. So you see, NDIC is really doing well. Ladies and gentlemen, as we celebrate this 20th anniversary of NAM, let us take pride in how far we have come, but also renew our commitment to doing even better. Sound governance, strong risk management, compliance, they are not just rules. They are foundation for public trust and long-term sustainability that will transform lives across our nation, Nigeria. The microfinance sector remains vital for inclusive growth and development. NDIC's commitment to deposit protection and financial stability is unwavering. Effective collaboration between the NDIC, the CBN, the National Association of Microfinance Banks requires structured coordination, shared intelligence, and joint capacity building. Together, let us build a safe, a sound, and an inclusive growth for this sector. And on behalf of the management and staff of the NDIC, I once again congratulate NAMB on this significant milestone and commend its leadership for 2 decades of remarkable contribution to the financial inclusion and national development. Thank you for your kind attention, and may the Lord bless you. Thank you. So I have timbers and calibers from NDIC here. The zonal controllers are here. So we will welcome any question, any clarification that we may get from the audience. Thank you. So I think I can take a bow. Thank you.
Thank you. The MD, NDIC, ably represented by the director. So once again, can we put our hands together for the Managing Director of the NDIC? Thank you very much. We appreciate you for that very wonderful presentation. Thank you. Now we know that NDIC does not collect subvention from government, but perhaps there are other contributions that government make. So, but if you want subvention, our able senator is here, so we can tell them to bring it up at the National Assembly and they will do that for us. Okay, so do we have any questions? Do you have anybody that has questions for NDIC? If you have one or two, can we see your hand up? Okay, our president will go last. If you have questions, please, if you're at the back and you have questions, can I see your hand? Okay, please, can you come? Can you come? So that she will see who is asking what question. Yeah, I think there's somebody at the back there. Please, if you have questions, who else has any question for NDIC or clarifications? Okay, please, can you come? Let's take this question, then the president will be the last one. Thank you.
I want to appreciate Madam once again. Thank you so much. The expectation is to hear much on the issue of Heritage Bank. We want to hear better so that we'll be in a very good position to relay the information to our people at home. That's the only thing that I want to say. More clarification on this heritage matter. That's my own question.
Okay. Madam, do you want to take them one after the other? You want to note them down? Okay, okay. Is it the same thing? No, don't worry.
Okay, thank you. Honestly, the issue of heritage would have come into the body of my presentation. How many? Over 60-something microfinance banks, they have their investment in Heritage Bank, and they burnt their fingers. The setup of microfinance bank is not for investment drive. The only thing that carried the microfinance banks subsector to Heritage was higher interest rates. And we always want everybody, not only operators, including me, if you have anybody that is offering you an interest rate above the industry percentage, run for your life. But no, instead of us to do micro lending, we carried our money into 20, 30%, I don't know, and they're supposed to have seen the signal there. But however, the microfinance bank subsector is treated by the NDIC as a depositor. A depositor with respect to Heritage Bank liquidation, because you are depositors there, not bank. So, as depositors, you are entitled to 5 million per depositor. And that has been paid. And apart from that being paid, we have also paid the first dividend of, I think, about 9.2%. But let me also state here, part of the reason why we came en masse is for those microfinance banks that have not received their insured sum of 5 million or the first dividend that has been declared, to go to the booth of NDIC, because we have the database. We came with all the information there to find out why you have not been paid. There was innovation in the treatment, in the closure. It was a novel innovation that really brought the NDIC to limelight. We network. You know, when we talk of partnership and collaboration, Madam, the ED is here, NIPS. We collaborated with NIPS. Thank you very much. Thank you so much. So instead of asking you to come to NDIC, go to our zonal offices to do your verification, we partnered with NIPS, and they helped us with the platform of the BVN of NIPS. So people were just sleeping. Even people that forgot that they have money in Heritage Bank, they were just getting alerts. I'm sure that most microfinance banks here, you did not you did not apply for your money, you just received your alert. Because that is the importance and the essence of collaboration. And we need to continue this collaboration. We made use of the BVN that you submitted when you were doing the account opening, and we credited your other banks, your banks that have not been liquidated. That is what has happened. Some microfinance, even NAB came to NDIC, and they said, is there no consideration for us? Because these are depositors' money. Because some of them have over 300 million in Heritage Bank. You can't believe it. They said, we're suffering. We now told them, we are limited by the act that set up NDIC. The only people that can ask us to pay your money in full is the lawmakers. If there is amendment in the NDIC, just like you operate with the corporate governance rule, we operate under the NDIC guide, NDIC Act. So there is nothing we can do except that a senator is here. So the lawmakers are here, except there is change in the act. So is there, I don't know if I answered the question. I have not answered the question. Yeah, thank you.
Can we put our hands together for our director? Please, can you come and answer? I know the question, I know the answers probably want to hear is, by this time tomorrow, your money is available. Okay, but of course, I know we'll get that. We'll get to that.
Okay, thank you. My question is still on the subject matter. I represent the block of microfinance banks in Anambra State. The organizers of this event, we know that there is a massively low turnout from banks in Anambra State, and it is simply because of this issue. So, the first explanation, with all due respect, personally, I don't think I'm comfortably with it. Why? We had memos, we had circulars from CBN. 2 months before Heritage Bank's closure, and there was an assurance that no bank is going to go under. And of course, that assurance stems down from the fact that for over how many years in Nigeria, no bank has been liquidated. So Your explanation, we got it. But if you are sent on an errand, you are bound to deliver. So please, I will still want NDIC to know what they will do. It's very bad that over 70 banks in Anambra State are not here, and they are doing it in solidarity. It is not really about the people that have money there or the people that don't have money. And there was a program that was recently organized by NAM before this. I think two, it didn't hold, the one for Southeast, I'm not sure it held. And it's because of this heritage issue. So please, I want NDIC to look at this. Look at the appeal from NAM, because we know that NAM has really done what they should do. So please, it's an appeal. Thank you very much.
Thank you. Madam.
Yes, actually, the president of NAM made that appeal to the CBN, made that appeal to the NDIC, but like I said, microfinance bank is for the uninformed. Deposit protection is for the uninformed. We said the economically active poor. That is even, talking about the scheme. So we expect even that before the banks, the directors of banks decide to carry their investment to a certain bank, they would have read a lot of, they will be financially informed about the suitability of where they are investing their money. So, I said, when the question was being, when you were raising the question, I was saying, well, thank God my able director, OFIT, is here from the CBN, because you have said that CBN told you that no bank will go down. We will continue to tell you that no bank will go down. We will tell you so that there will be stability. Do you expect the CBN to come and say, see, Heritage Bank, we're not sure of it, it may go down tomorrow. So immediately it will create panic in the economy. And it won't be only Heritage Bank, to be every bank. So I don't know if the director of it will want to add one or two things to this. Thank you, sir. I know you will always be supportive.
Anyway, in as much as we have promised that we are not going to use any form of force in conveying the messages to the operators, and I've said it repeatedly, we have to behave responsibly. Everybody knew what was happening to her. Like Madam said, no bank would be allowed to fail in Nigeria, irrespective of what happened. But you have to have a very responsible market conduct. But how can you rationalize a situation? You see a bank going down. Heritage Bank has been in the news for more than 2 years. But because of the greed, and because the money is not yours, and that is wickedness. Because they are depositors' money, hapless Nigerians. Without their knowledge, you carried 300 million. Can you carry your own money, or money from your own state, or from your own community, and go and put in such an investment? So in as much as Central Bank will always be there, and of course, a number of us can attest to that no institutions, no financial institution will be allowed to fail, but you have to behave responsibly. And that's why CBN will take over any bank. If there's any sign of, weaknesses or any form of sign in respect of insolvency, CBN will move in and take over the bank before you put any depositors into jeopardy. So in as much as we are trying to safeguard and protect the banks, the primary constituents are the customers, the depositors, and we shall not hold back to protect them. Thank you very much.
we want to show appreciation again to the Managing Director of NDIC, who has been ably represented by the Director SISID. Please, let's give her a round of applause. When Madam gets to Abuja, we want her to also show our appreciation to the Managing Director. And, you know, today is a special day. It's a very, very special day in view of their special dignitaries who are sitting here with us today. I don't know. They said with this mic, I can do anything, but I'll be careful. Sir, may we have the honor to have you help us present the award to the Managing Director of NDIC. And, sir, team leader, Director, OFID, team leader, team lead, okay? President, sir, can you join us?
My colleagues from NDIC.
Okay. All the NDIC members who are here with us, please join Madam in receiving this award. NDIC examiners. We understand now. Yes. NDIC examiners.
Sometimes the snow comes
On
down
behalf of the National Association of Microfinance
Sometimes
Banks,
the sun goes
I have the singular honor to present this award of excellence to Mr. Thomas Oludare Sunday, Managing Director, Chief Executive Officer, Nigeria Deposit Insurance Corporation, NDIC, in recognition of outstanding contribution to the growth and sustainability of microfinance banking. Congratulations.
Sometimes the sun goes round the moon. I see the passion in your eyes. Sometimes it's all
of the management of the NDIC, especially the MD of the NDIC. We are not taking this for granted. We want to appreciate the recognition that regulators are very, 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 very necessary in the growth of the microfinance bank and the sector of operations in Nigeria, as well as now. And I once again congratulate you. Keep it up, the leadership. Thank you very much. The MD will hear you.
the best for last. All of the nights you came to me, some silly girl had set you free. You wondered how you'd make it through. I wondered what was wrong with you. 'Cause how could you give your love to someone else and share your dreams with me? Sometimes the very thing you're looking for is the one thing you can't see. But now we're standing face to face. Isn't this world a crazy place? Just when I thought our chance had passed, you go and save the best for last.
It is now time for the goodwill message from the APC National Secretary, a long-standing friend of NAM, a supporter of our sector, a man who believes so much in microfinance banking. No wonder he has flown again all the way from Abuja, despite his tight schedule, to join us today, and he will be leaving immediately after his goodwill message, because he has actually come to the state purposely for this. So please join me to appreciate our senator. Senator Ajibola Bashiru is a seasoned legal practitioner and public affairs analyst with rich and varied experience in the public and private sectors. He's a distinguished legal scholar and author with a PhD from the Department of Private and Public Property Law, University of Lagos. And is duly admitted to practice law as a barrister and solicitor of the Supreme Court of Nigeria after attending the Nigeria Law School. In addition, he has also attended courses in leadership, management, arbitration, legislative drafting, entrepreneurship, and information technology. Senator has an excellent record in legal practice, and his involvement in recent years extends to consultancy services for corporate organizations to ensure operational excellence and productivity through a unique understanding of government policies and legal and regulatory frameworks. Aside from consultancy services, he is involved in many landmark litigations and commercial deals in the Nigerian economics, banking, oil and gas, and telecommunication sectors. Doctor has also been part of several electoral litigation teams in Nigeria and has acted as a consultant for several political organizations on election-related matters. In 2011, Dr. Ajibola was appointed Commissioner for Regional Integration and Special Duties in the state of Osun. And in that capacity, he was responsible for law reforms, judicial sector reforms, and policy coordination. To his credit, over 50 laws were passed during his tenure. He held his positions till November 2014, when he again went into private practice until he was appointed Attorney General and Commissioner for Justice, State of Osun, in May 2017. He held this position till November 2018. In February 2019, Dr. Ajibola Bashiru was elected under the All People's Progressive Party, APC platform, as senator representing Osun Central Senatorial District. After the inauguration of the 9th Senate in June 2019, Senator Bashiru initially emerged as the chairman of the Senate Committee on Diaspora, Non-Governmental Organization, and Civil Societies until he was appointed the Senate spokesperson and chairman of the Senate Committee on Media and Public Affairs. He is also a member of the other committees such as Committee on Constitutional Review, Judiciary, Human Rights, and Legal Matters, Petroleum Resources Downstream, Petroleum Resources Upstream, Committees on Air Force and State and Local Governments. At the expiration of the 4-year term, he was elected the National Secretary of the Nigerian Governing Party, the All Progressive Congress, and was only recently appointed the chairman, National Sugar Development Council, by President Bola Ahmed Tinubu, GCFR. Dr. Ajibola is a prolific writer and has written several books and journals, articles. Amongst the significant publications are Foreclosure in Mortgages, The Nigerian Perspective, A Critical Appraiser, Evolution of Sources of Compulsory Acquisition Laws in Nigeria. Dr. Bashiru, a multi-skilled legal practitioner, is a member of several professional, academic, and political associations, among which are the Nigerian Bar Association, Africa Bar Association, International Bar Association, Shadow Institute of Personnel Management, Nigerian Association of Law Teachers, and the All Progressive Congress. He has delivered papers in various scholarly conferences, including the annual conference of the Chartered Institute of Personnel Management, State and Local Government Reform, annual retreat public lectures organized by the Nigerian Society of Engineers and Faculty of Basic Medical Sciences, College of Health Sciences, Ladoke Akintola University, and attended several local and international workshops and conferences. He was a former senior lecturer at the College of Law, Osun State University, and is currently a visiting lecturer at the Nigerian Institute of Legislative and Democratic Studies, Abuja. Senator Bashiru, a Paul Harris Fellow of Rotary International and recipient of the Federal University Oye-Ekiti Vice Chancellor Special Meritorious Award in Public Administration, is happily married and blessed with children. I present to you our dearling Senator.
In the name of Almighty God, the Beneficent, the Merciful, the President, National Association of Microfinance Banks, the Director of the CBN, the Directors of the NDIC, the ED NIPS, I crave indulgence to stand on the existing protocol. And I must apologize for not being able to be here yesterday for the opening ceremony. I was engaged in Abuja because I had to stand in for my national chairman, but I had made commitment to be here. So eventually I was able to get to this place yesterday evening. And I must also thank the governor of Akwa Ibom State for hosting me since yesterday and providing protocol and security for me. It is with great gratitude to Almighty Allah that I first, so that's the clap for the governor of Akwa Ibom State. You see, that's the benefit of when your political party has the many number of governors in every state and redrawing the map. Maybe if I was here last year, I would not have that kind of a protocol requirement. Yes, I will have, definitely, yes. It is with gratitude to Almighty Allah that I felicitate with the National Association of Microfinance Banks on this landmark occasion, marking 20 years of microfinance banking in Nigeria. The theme of this conference, Microfinance Banking, Bridging the Past, Empowering a Sustainable Future for Economic Development, appositely sums up a journey of resilience, innovation, and impact that the microfinance sector has had for the past 2 decades. Microfinance has come a long way since its humble beginning as community banking to an important tool for financial inclusion, poverty reduction, and development of micro, small, and medium enterprises, aligning with the federal government goal of promoting inclusive economic growth and prosperity. Over the years, microfinance banks have been significant in making it easier for private individuals and MSMEs to get loans, especially young people, women, artisans, and vulnerable groups who are the backbone of Nigeria's informal economy. In fact, it's been said that the driver of Nigerian economy is not so much as the formal sector, but the informal economy. However, as we celebrate these milestones, we need to remind ourselves that challenges lie ahead, like technology and digital infrastructure, which I think the NDIC has said in making presentation, regulatory compliance, and corporate governance. The National Association of Microfinance Banks must therefore embrace digital shifts and strong corporate governance to support sustainable economic development. The greatest disaster that can happen to people is to have their hard-earned money evaporate because of lack of effective corporate governance by individuals. As a student of corporate law, whereas financial institution is a bulwark for financial development. It also can be a veritable instrument of fraud perpetrated on the large scale of the Nigeria of the people. Therefore, as the governing political party in Nigeria, that's my party, we are committed to an inclusive economic development, and that has been represented in the giant strides of the CBN in the past 2 years that we have been in the shadow. It seems our government sees microfinance as a key partner in achieving the Renew Hope agenda of President Bola Ahmed Tinubu for economic diversification, MSME growth, and social empowerment. Our concern is to ensure that Nigeria goes to the back of productivity as the basis of prosperity and economic development. I therefore sincerely commend the leadership and members of the National Association of Microfinance Bank for their vision and perseverance over the years. I must say that I'm indeed impressed by the quality of attendance of this conference and also the receptiveness of the attendees of this conference. As we look forward to the next decades of microfinance banking in Nigeria, the realization of achieving a prosperous economy depends on consolidating the gains of the past, adopting technologies for banking transactions, and working more closely with the government, particularly at the state and local government levels, to provide low-cost financing to women and youth entrepreneurs, MSMEs, agro-businesses, and creative industries. I want to join us to enjoy the best of African vegetable soups while you are here in Akwa Ibom State. And for those of you who are golfers, go to the Ibom and have some round of golf. Enjoy your conference and have a great day. Thank you. God bless you.
Sir, the NWC member and our special dignitaries want to take photo with you, sir. Past president, please. NWC members. I know. It's a special honor to have you with us. Sorry. Can we please come to the podium? Sir, directors. Dave.
Many nights we prayed with no proof anyone could.
The BOT member, sir.
In our hearts a hope for soul we barely understood. Now we are not afraid, although we know there's much to fear. We were moving mountains long before we knew we could. Oh yes, there can be miracles when you believe. Though hope is frail, it's hard to kill. Who knows what miracles you can achieve when you believe? Somehow you will. You will when you believe. In this time of fear, when prayer so often proves in vain, hope seems like the summer birds too swiftly flown away. Yet now I'm standing here, my heart's so full I can't explain, seeking faith and speaking words I never thought I'd say.
can see the turn of our events today is loaded. And we are, because of circumstance, we are changing the program. Please, we're supposed to have gone on tea break, we know. But because most of our speakers have commitments, and they have to leave, and they have all traveled from far to come and partake at this event with us. So I'm appealing to our member banks who said they can be serving water. They can maybe, if Madam Comfort, please, you can serve our refreshments here. And they, so they will serve our refreshment as we are sitting, so that we'll just continue the program. Do I have your acceptance? Thank you, thank you, thank you. It is time to listen to our lead paper presenter. Our lead papers presenter is from the World Bank Group, and he will be speaking with us on microfinance banking, bridging the past, empowering a sustainable future for economic development. Please join me in welcoming Mr. Dave Grace to the podium. Let us know a little about Dave. Mr. Grace is a consultant for the World Bank Group and the executive director of the International Credit Union Regulators Network, the Global Association for Financial Cooperative Regulators. He was previously with the Federal Reserve Credit Unions and is the managing partner of Dave Grace and Associates. He has worked in over 80 countries advising financial institutions and governments on financial inclusions, credit unions, and microfinance on behalf of the World Bank, International Monetary Fund, Asia Development Bank, United Nations, Gates Foundation, and others. Dave is a research fellow at the University of Wisconsin Center for Financial Security and on the Financial Committee of the Willie Street Corp. He has a master's degree in international affairs and finance from the Washington University in St. Louis and is fluent in Spanish and English. Please join me in welcoming Dave in Spanish language. You have our attention.
Muchísimas gracias. So I can tell you that when my wife hears that I've worked in 80 countries, she's not happy about that. It means I've been gone a lot. So thank you for having me. Thank you to the president of NAM, the past presidents of NAM, the directors of OFIS, director of NIBS, director of NDIC, all of the presidents and managing directors of the microfinance banks, all protocols observed. So thank you for having me here. What I want to do today is I'm going to start with actually having you stand. I know that so like last night, right? I want you to stand up, all right? I don't want you to leave. Just want you to stand up, stretch a little bit, move your legs a little bit, okay? All right? The refreshments are coming. So, all right. So we'll stretch a little bit, and now we can we'll get on with the show, as they say. So the World Bank is very happy to be a partner with with NAM in this. Over the last several years, I've been working with the association to understand the status of MFBs here, and we'll present that data of what we see. Next slide. So we'll cover kind of the past, what works in this sector, what doesn't work in this sector, how to improve data and service delivery in the sector, and also a new opportunity for MFBs that is coming. All right? So we will look back, we will look at future as well. Next slide. I want to start with an overview of the financial sector. What's happening here? I've heard a lot of discussion about, fintechs. But fintechs is just one part of it. And in fact, a very small part of it. Somewhat similar to MFBs being a small part, right? So right here we have the DMBs, all right, commercial banks, 35 of them. They have 168 trillion naira in assets. All right? If we look at the MFBs together, the 806 of you, or 821, or however many there are exactly, you've got about 3.3 trillion in assets. You're about 2-3% of financial sector assets. All right? And there have been times when I've been at meetings here in Nigeria at CBN with others in the financial sector, and they say, Dave, why do we care about MFBs? That's the truth. Why do we care about MFBs? They're 2% of financial sector assets. Right? And I always point out to them, yes, that's true. They're only 2% of financial sector assets. But let's dig a little deeper. What do MFBs do with their assets? And what do the DMBs do with their assets? Okay. So what the DMBs generally do, they get a lot of deposits in, as you know, right? They get those deposits in, and they only lend 35% of that money back out. And who they lend to mainly are the big corporates and high-income individuals. Right? That does very little, actually, to create jobs in the Nigerian economy. 98% of all jobs in the Nigerian economy come through micro and small enterprises, not medium and large enterprises. All right? Even in the United States, these massive companies like Google, Amazon, Meta, they represent half of employment. It's micro and small enterprises, even in the States, that are the drivers of employment. So what we see is the DMBs, they're very good at bringing money in, but a lot of that money, they buy treasury bills, and they sit on their hands, and that's it. That's not that helpful for the economy. And in fact, even with that, the DMBs serve about 60 million clients. Now, if we look at you all as a sector, nobody knew these numbers until about a couple years ago. And I said, you know what? The MFBs as a group, they serve 58 million clients. Almost the same number as the DMBs. And it's that point that you see policymakers and CBN sit up and say, really? And then I point out that when the MFBs get money in, what do they do with it? They lend it. okay? 62% of all your assets are out in loans. If I look at deposits, yes, you should clap for yourself, absolutely. Yes. And, you know, those 58 million members that you have. So, okay. Those 58 million members, 20 years ago, you had 350,000 members. 20 years ago, you had 350,000 members. There's been an explosion of membership here. And that number of members that you have right now, that could double if you had more money in, right? Every dollar you bring in a deposit goes out in a loan. You don't sit on that money. You move that money for the economy, right? That is your only saving grace. I said, you know, people say, well, why don't we just get rid of the MFBs? 800 of them, they're small, they have problems, they're 2% of financial sector assets. Let's just wind them all up. Your saving grace is that you're serving 58 million clients and you get the money back out. If you weren't doing that, I hate to tell you, okay, but you may not be here otherwise, right? Now, it isn't just MFBs and DMBs, they're the main ones, but then sitting outside that regulatory perimeter, there's lots and lots of thrift and credit societies. Nobody in the country actually knows how many. We just conducted a survey with the Federal Director of Cooperatives, and they don't know how many thrift and credit societies there are. There's thousands of them, probably serving millions of people, but the regulation and supervision is awful, okay? It's kind of where you all were 20 years ago, or maybe where you all were 30 years ago, right? Many of the MFBs grew out of community associations, community banks, right? And then even sitting next to the cooperatives is another circle. Microfinance institutions, Isusus, right? Nobody has any idea how many they are. They're unsupervised. They should be unsupervised. Buyer beware, okay? But the kinds of practices that happen there should be different than the kinds of practices in MFBs. So at the World Bank, when we look at the MFB sector today, what's working and what's not working? Certainly, as I said, what's working is MFBs are serving millions and millions of small borrowers and savers. You have nearly the same number as the DMBs do, okay, which is extremely important. MFBs are actively lending a large percentage of their assets. And your NPLs aren't that bad, okay? It's not great, but it could be worse, all right? And I'll talk about this data, where I got the data and so forth. But last data I had, it was around 9.5%. It could be in the neighborhood of 11%. You know, this idea that globally, yes, most MFBs should be around 5%. And if you had GIS, it would be 5%, okay? Which, by the way, I think you should have, all right? Lastly, the main thing, if you want to make sure that your bank is doing well, focus on the last one. CAR, capital adequacy ratio. All this talk about, oh, national versus state and, you know, tier 1, tier 2, and you need 3 million, 5 million, 1.5. I could care less. I care about one thing. capital relative to your assets. That tells me how much you have to absorb losses based on the risks that you have, all right? And your car relative to your assets is pretty good, okay? As a sector as a whole, there are some of you, maybe not in this room, but there are some MFBs that are illiquid. That's a polite way to say bankrupt, okay? And need to be exited from the system. What's not working in the MFB sector? So, first and foremost, there is insufficient reporting to CBN. I'm not talking about the volume. You know, I've seen that worksheet you're supposed to send in, right? 58 Excel tabs on it. Crazy. Crazy. All right? Now, when I say insufficient, I mean many MFBs aren't reporting that should be reporting. There's no excuse for that. Your regulator can't do anything if you're not reporting data. And that's going to change. All right? Secondly, there is low confidence in MFBs. All right? Clients save at the DMBs and borrow from the MFBs. Right? Why? Why does that happen, huh? It's confidence. All right? Now, it's not only bad for confidence, but these individuals that we're talking about are some of the lowest income wage earners in the country. And the savings that they have, they're not able to leverage to get loans with you. It's a bad deal for them, and it's bad for you. Rather than having GSI, rather than having GSI, I'd rather have their cash with me. But they're not going to because they don't trust you enough. All right? That's your problem, not their problem. Okay? They don't trust you for many reasons, okay? One is on the loan side. Loan practices. These concepts, what we heard a little bit this morning about, well, we'll go after them with a hammer. You can go after me with a hammer, but I'm not going to put my deposits with you. Okay? The other thing is the way that your brand gets mixed in with other entities. Last night, Miss Martins talked about that niche article from last week that, you know, MFBs and CBN needs to crack down on it actually talked about micro lenders, many which are unlicensed. Sorry, you all have a brand problem in the sector. All right? And that affects your ability to bring deposits in. All right? Part of the brand problem is non-transparent and high cost of credit. All right? When I see effective annual interest rates 60%, 70% by some, all right? Some of you were doing, instead of declining balance interest rates, you had flat interest rate, right? I think things are moving away from that, I hope. But that's one of the impacts of that. And also direct access and settlement at NIBS is needed for the sector, okay? But to do that, you've got to have one thing, the magical thing, a reserve account, all right? NIBS is all predicated on a reserve account at CBN. No reserve account, no NIBS. Now, to have a reserve account, you have to be able to pledge securities on the same kind that DMBs. And some of you can, right? Other ones can't. So that whole GIS and everything else, it all comes down to your reserve account, right? And confidence, to be quite honest, within CBN about the sector. If you can't report to CBN, why should you can't even report, and you want to make sure that you have a reserve account? Sorry. Yeah. That's not going to work. So you've got a brand problem. We talked about it in the marketplace with consumers, but also with policymakers too. All right? And so you're doing better. This conference, things like this is one avenue, but having clear data is another avenue. All right? So here's some data. About a year ago, working with DBN, or sorry, not DBN, CBN, they shared with us bank-by-bank data, anonymous, okay, for all the institutions that they had. That number was only 254, all right, where they had good data on MFBs. 254 out of 800 or 780, that's not a very good percentage. But this is really the bulk of the sector assets and clients. And when we look at the sector this way, over a 5-year period, see the capital asset ratio has gone down a little bit. That loan to deposit ratio is steady. Every Naira you get in, you can get back out in lending. The challenge isn't lending or willingness to lend, it's getting deposits in. And that's about access and confidence. It's not about rates. Some of you have better rates than the DMBs. So why don't you have all the money? Right? Because I can't access my money easily in an MFB. Or I don't feel that it's safe in an MFB. All right? Your loan to asset ratio's gone up a little bit. ROA, all right, has been about flat over the last 5 years, all right, pre and post-COVID. 0.009 minus or 0.009 plus. All right? As a sector, you're about even. And NPLs have been hovering right around that 9.5%. All right? I've seen some data more recently that maybe NPLs have gone up a little bit. A lot of the other figures are right around that same range. But that's the sector as a whole, all right? Or at least those that are reporting. Within the subsector, there are also some very, very strong MFBs, all right? Today, there are 38 MFBs working with the Development Bank of Nigeria. Right? These are national, states, and unit, and tier 1, tier 2s. All right? Among those MFBs working with Development Bank of Nigeria, they had 4.5% NPLs and 28% capital as of June of this year. That's fantastic. All right? There are some really strong MFBs. All right? And there are some very weak MFBs. Okay? But I think those 38, I mean, that's kind of the creme de la creme, the very top of the sector. All right? And what they're doing is they're accessing additional liquidity through Development Bank of Nigeria. All right. What I do here is I break down and I look at, within the World Bank, we're trying to figure out what's the growth potential of this sector? Where could this sector actually go? So we looked at some comparator countries and the microfinance banking sectors in those countries. So we looked at Kenya, South Africa, Uganda, and Brazil. Right? Some economies that, we could have discussions, academic debates about, are there economies like yours? Aside from, the location, these are pretty similar economies. And what we look at is what their DMBs are doing. Their DMBs in these other economies are doing better than your DMBs are, all right? They're bringing in more the resources they're bringing in, they're mobilizing more for private sector credit. Globally, if you look at how Nigeria economy is doing with credit access, it's one of the most credit-constrained economies in the world. And there is a direct correlation between credit access in an economy and financial and development of that economy, all right? Part of what's holding your country back is a lack of access to funding, all right? These other the banks in the other countries are doing more than your banks. But when we look at MFBs across these other countries, it's kind of similar to the situation, right? The MFBs in those other countries are much more effective at getting deposits back out in loans than the commercial banks are. This is a key characteristic of MFBs when you look at many countries, right? So do these other countries, I haven't heard it talked about much yet, but the infamous single obligor limit, right? SOL, this 1% single obligor limit. I've worked in 80 countries around the world. Rarely have I seen a single obligor limit so low, all right? I see single obligor limits in Kenya, 5% of capital, South Africa, 15% of capital, Uganda, either the lesser 10% of assets or 25% of capital, and Brazil, 25% of capital or 15% of capital if an MFB is not part of a banking service organization or federation. And I'll explain a little bit more about that in a minute. Limitations on loan durations? No. That's not a common thing that we see with MFBs in other countries. But this middle row, market share, all right? Market share of assets. MFBs here, as I said, have about 2%. If you go to Kenya, 3%. Kenya's 15%. South Africa, who, I know your beauty queens compete back and forth with, South African beauty queen and the Nigerian beauty queens. They're even beating you on MFB size there. Uganda's MFB sector is larger. Brazil's MFB sector is larger. All right? So it's easy to imagine that the MFBs here, with some adjustments, could serve 10% of the financial sector. All right? That'd be 5 times. You're $3 trillion today. In 10 years, you could, assuming inflation was 0, like 5 times that. You could be a 15 trillion naira sector. All right? That's not unreasonable at all. 15 trillion in this sector. But you need to get a couple things right. One of those, so yesterday we heard some great presentations in the afternoon about the need to move towards IT. Right? Are you walking, running, standing, flying, or soaring? Right? And you all were jogging maybe, right? Somewhere in that path. Right? discussion about how to do that. The problem is that microfinance banking has levers in it. When you do one action, something else changes, right? I pulled this one, but then this one moves in the opposite direction. They're connected, they're levers. I can bring down my NPLs to 3-4%, but my operating costs are going to go way up because what it's going to take to do that. All right? You want me to invest all this fintech data, et cetera? How do I do that? What a lot of MFB sectors do, including some of the ones up on the screen there, is they work more cooperatively. All right? You all aren't doing much of that today. When I look at the MFB sector today and say, where are there shared operations happening? I don't see them. I want to go back to this screen here, all right? The very first one. Right now, a lot of MFBs, you think your competition is other MFBs. It's not. Those other MFBs, together as a sector, you're 2% of the financial sector assets. Your competition is not each other. Together, you're 2%, all right? So, and even the DMBs, they look at a totally different market. Your competition, to be honest, is the uncles and the aunts, friends and family borrowing, the thrift and credit societies. The number one place really is friends and family. That's your main competition. All right? So, one thing that some MFB sectors have been able to do in other countries is work together to offer shared services. So there are some discussions right now happening in the country about allowing MFBs to create banking service organizations. So a banking service organization is a second-tier wholesale MFB that is owned by MFBs and provides service to you. All right? Sometimes these are called either a federation, a banker's bank, a central, a corporate, what have you. But they play a role in oversight, data collection, market discipline of the sector. If you want to grow to 10%, all right, 15 trillion as a sector, grow your clients you're serving 5 times, right? Yeah, you're going to have to work together. What this can do is can bring economies of scale for you that individually you can't do. The discussion about, how do we soar? How do we do fintech? You can't do it alone. Go do the math. Do the math on what the kind of system you need to put in place to reach that, and whether or not you can afford it individually, it doesn't work out. Now, if I get together with 50 other MFBs or 100 other MFBs and share some of these costs, this can work out. But you're going to need to change a little bit who you think the competition is. So what can a business service organization offer? And they may offer centralized access to the payment system to clear and settle payments. They may offer centralized audit services, HR services, IT services. Do you compete with each other on compliance? No. Compliance is a cost, something that you have to do. All right? AML-CFT, you're not competing with another MFB on AML-CFT. It's a cost. You have to do it. Why don't you share compliance officers? Share those costs. All right? on access to the payment system, all right? In some countries, MFBs work together and clear their payments and settle them through an organization that they own. This isn't an idea that actually comes from Nigeria. I was talking to an MFB 2 years ago, and they said, Dave, we tried that a couple years ago. There was a group of MFBs that were having discussion about owning a DMB. What? MFBs owning a DMB? Yeah. And they wanted this DMB to not provide services to individual man and woman, but to only provide services to the MFBs. All right? Why? Because that would be their access to NIBs. Right now, some of you, if you're clearing through a commercial bank, all right, whose transactions are they prioritizing? Theirs or yours? Exactly. If you were to have either direct access or an organization that you own and control, whose transactions is it going to prioritize? Yours, right. Some of these new fintechs that got into the MFB business, the only thing they did, their main thing, was processing payments that worked. That alone was an innovation in the marketplace to get them millions and millions of clients. All right. If right now in Lagos there are MFBs working together to intermediate funds amongst themselves, some MFBs have excess liquidity, some MFBs need liquidity. Either we can go to a DMB and they're going to take their piece off the top of it, or we can do this amongst ourselves, right? And we're not going to take the piece off the top of it. We're going to lower our cost of funds. The problem is that many of the MFBs right now all need liquidity, all right? So it's making sure that you have access to what you need. So all of these can help smaller MFBs gain economies of scale and professionalism. There are examples of these banking service organizations in other countries. We were talking to people in the country about these in Brazil, Korea, Canada, South Africa, etc. There are examples globally. Visa and MasterCard are actually banking service organizations, cooperatively owned organizations that banks own to process payments on their behalf. NIBS is in fact an example of that, all right? A type of service organization that has come together to provide those services. So what are pros and cons of banking service organizations? So a pro is that they enable smaller MFBs to share resources to make their services more competitive, cost-effective, and standardized. All right? Help professionalize some of the smaller MFBs. If they cooperatively own, they can give the MFBs a voice in the nature of services that are offered, instead of using a service provider who's also a competitor, who's 98 times bigger than you. All right? It can instill market discipline in the sector, by the sector. But there are cons, all right? From a prudential perspective, this can concentrate risk in the sector, all right? So you need to be careful about what a business service organization does and what it's not doing. So that's one opportunity. And there's discussions right now about enabling business service organizations in the marketplace. So as I said, these have been in discussion before. There are some in Lagos doing already this. And To be a business service organization, there are talks of maybe some kind of specialized license, whether it's a wholesale MFB with different regulations and norms, a DMB that's owned by an MFB. It really would depend on what this business service organization would be offering. If it's intermediating funds, then it's got to be prudentially supervised. If it's only doing back office services and not intermediating funds, then you've got operational risk, cyber risk, operational risk, but not prudential risk there. All right. So I want to discuss one other opportunity. It's my last slide, that the World Bank is working on right now for the financial sector, not just MFBs. But the World Bank is working with Ministry of Finance and Development Bank of Nigeria on putting together a $335 million loan to Development Bank of Nigeria. So let me put that 335 million US, that's about 500 billion Naira loan to DMB. For on-lending, either in the form of direct loans or Tier 2 capital to MFBs and DMBs, right? In addition to that 500 billion, we're looking at another 150 billion to ICGL, right? I hope you all know who ICGL is. Impact Credit Guarantee Corporation Limited. They help take on credit risk, right? Now there's a cost associated with it. There are very, very few DMB or MFBs working with ICGL today, right? As I said, there's about 38 MFBs working with Development Bank of Nigeria, right? But we know that you have trouble bringing money in. Long term, the way to save that, to solve that, is on the deposit side. Improving the image, improving your deposit products. That's a long-term play. A shorter-term play is borrowing those funds. A lot of you borrow funds right now from commercial banks, from wealthy individuals, and you pay dearly for that, right? We're bringing 500 billion to the marketplace, hopefully in the next year that it would happen. We've already gone through a number of levels of approval. But at DMB today, the Development Bank of Nigeria today, 95% of the number of loans that Development Bank of Nigeria has supported has been through the MFB sector. 90% of the value of loans Development Bank of Nigeria has made is through the commercial banks. 90% of the value with the commercial banks, 95% of the number with you all, okay? Value versus volume, right? That right there shows the important role you play, right? Now to become a participating financial institution at Development Bank of Nigeria, you need to have standards in place. You need to improve some of your reporting, your ratios as well. So there's going to be more to come on this opportunity with the Development Bank of Nigeria, but I will leave it here. So thank you. And I'll take any questions if we have time for a question or two.
Thank you very much. The presentation is detailed and the data and statistics is helpful. In 2017, the treasurer of the IFC, was here, and he had a meeting with us. And the import of that meeting is that we should stop going outside to look for liquidity, because there is enough liquidity within. And he said, if you guys can come together and create a platform that will make the confidence level to rise up, then you can source all the liquidity you need from within. In 2018, we set up the Microfinance Development Company and built a trading platform for microfinance banks to trade among themselves in funds. I don't know what the exact statistics are, the regulators are, but I know that at least 300 to 400 billion naira of deposits of microfinance banks are sitting in the coffers of deposit money banks. I also am not sure of the statistics, but I don't think that deposit money banks' credit to the MFBs is up to 100 billion. So for the reasons that have been said, maybe for high interest rates, for risk averseness, we put our deposits in commercial banks, but they don't give us credit. In India, Reserve Bank of India says commercial banks must put minimum of 11% and maximum of 19% of the deposits, of their credits to the non-bank financial institutions, which is the equivalent of the MFBs. Today, I'm sure CORE is here and the MDCL is here. We have partnered with CORE to manage the trading platform. But nobody is trading because of the issue of confidence. Two things that can happen and will change everything around. If the CBN makes a pronouncement to say, MFBs trade with you, with yourselves. Because when we set up this particular trading platform and formed MDCL, Dr. Mrs. Martins was the director of Office D. I'm told we should appreciate the director. He has to catch another appointment, please. Thank you. So, I did say that the director of FISD said, asked us to apply for a license so that this company can be the development financial institution for the sector. So two things I ask. If the CBN cannot give us a guarantee to make us have confidence to trade with each other, can the World Bank give us a guarantee? We have enough money within for those who are afraid to lend, for those who prefer to make money from the liquidity market, to give to those who are a long stronger that has the mind to take risks and lend. So that the monies we have, the deposits we have, will flow among ourselves. But what these people need, this sector is, Bank MFBA wants a confidence that if he puts money in MFB and it doesn't come back, he has the guarantee of the government or the World Bank or the regulator to say, we will give your money. If we do that, in 5 years, we will not be discussing these things we are discussing, because the sector is going to be stronger, the liquidity will be there, the asset base will grow, because people will have no fears anymore. Can the World Bank assist? Thank you.
Thank you so much. You've done very well. We appreciate you. But there are a lot of things that are, okay, I am Professor Abiodun Amudakanike, Senior Advocate of Nigeria. I'm the Secretary of the Board of Trustees. I'm from Chairman Ilorin Microfinance Bank. Now, what I want to say is that there are a lot of problems that you know that we need to solve with respect to the microfinance bank. One of that problem, which I believe that you can also solve for us, is that it is we that we go straight to the roots, to the downtrodden. I don't know whether we want to say minus downtrodden or plus minus downtrodden in the society. We are the ones. These are the people that cannot even go to any of the major banks. That is, I don't want to talk against any of the major banks here. Truly speaking, Stanbic, Sterling, and so on and so forth. They will not be able to have access to go to that place. It is we they will come to meet. Now the problem is that unless the federal government is advised, especially through the central bank and even the World Bank platform, that some of those policies in terms of encouraging the masses, how to build up the farm settlement and all the rest. Once that money is thrown up, it goes to the major banks. It does not come to us. So by the time they even try to implement, they are implementing zero, with all due respect. And until you bring in the microfinance bank into what the government policy is all about, this issue of hunger will continue. Thank you very much.
Thank you very much. The name is Bumi Ogunrinde, founder Land Gold Microfinance Bank. I just want to leverage on what my past president said. Two things. To tell you for the CBN, for the World Bank, to directly guarantee us in Nigeria, for me, it would be a little overreaching. But however, I would suggest that the World Bank do a reinsurance for the CBN to guarantee us, because we were part of the team that started the MDCL, and we were quite very excited about it then. But unfortunately, like you said, due to loss of confidence, we didn't get so much embrace. Secondly, I really love the data you shared, especially the number of customers that microfinance banks control in Nigeria. And these we have also been discussing with CBN in the past. You see, the DMBs, they have the volume, but we have the customers. And when you look at it, we keep our monies with them, and we do not benefit anything. To collect cash is difficult, to collect credit is difficult, and it comes at a cost. They trade with our money. You want to collect the money, you pay interest on, you pay maintenance charge and all the rest. So we want the World Bank to please talk to our regulators that banking operations of microfinance banks with DMBs should be cost-free. For me, I don't see a reason why a microfinance bank will operate bank accounts with DMBs at a cost, because they trade with the money. So these are the things that are really impeding our operations and also raising our costs. Cost to mobilize credit is high for us. Cost to operate with the DMBs is also high for us. So, and again, when it comes to regulation, we are also regulated with the same template. You go to AMCL, CFT, it's the same template. Compliance is the same template. So these are the issues that the regulators really need to look at. Thank you very much.
Please, let's keep our questions short. We are running out of, we have a lot of things to do, and we have a short time to do all of those. Thank you very much. Prof, your question should not be academic, but very short.
Sorry, I'm not asking an academic question. I would like to, I have listened to the presentation that the PAR in microfinance banks is at high level. That is actually impeding them to access some development finances from DBN and other institutions. I don't know if you can give it another look. There is what we call legacy loans. Most of these microfinance banks were originally either community, some of them, community banks, mortgage banks, or even liquidated banks. So when we come, the central bank, definitely they are doing their work. And most of the things that the regulator here says is right. And it is his duty to push us to do the right thing. However, the legacy loans is something that we cannot do away with it easily. So if at least a 4-year, because you say that the MD's tenure is 5 years plus 5 years. At least his 5-year tenure or 4-year tenure would be seen, that particular management tenure should be seen with the PAR for that tenure. That is to tell the performance of that particular management. If they are doing well, then they should be supported. Probably that will change the narrative. That's.
Thank you very much. I may not be able to take any other questions, sorry.
Great, thanks so much for those questions. So on the first one regarding there's a platform in place, but it's not being utilized. MFBs don't trust each other. So if you can't trust each other, forget it. Go have tea, go home. Like, do you expect your clients to trust you? You don't even trust each other. Like, that's the lowest level. There is no way the World Bank is going to require, some guarantee for this. Well, why don't you trust each other? Because you don't have data. All right? You want to trust each other? Here's something radical. Start reporting to NAM and have NAM publish it openly. All your information. You can look at each other freely. From there, I've got no secrets. You can see me without my clothes. There you go. See how I am as an MFB. You could do that. You don't need CBN to do that. You could do that yourselves. Decide among yourselves if you want to do that. The issue of trust is sharing information amongst yourselves. And you're not even reporting to your regulator. You've got a long way to go on that one. The idea that you have enough liquidity within the sector, you don't. Like, some may have excess liquidity, but as a sector, right, your loan to deposit ratio as a sector is 118%. You don't have enough to go around, all right, on average. You're short funds, which means because lots of people come to you for loans. You have amazing loan demand, all right? You need to work on that other side of getting consumers to trust you, all right? I don't have time to go through, but if you look, some of these other countries, common branding, all right? Ethical treatment, utilizing resources together, all right? That's how these other countries got the MFBs where they are. Your MFB brand is only 20 years old. It's not that old. And during that period, it's been up and down, okay? Every couple of years, you close down, their CBN closes down, 180 MFBs. There is nothing worse for your brand than when that happens. Now, we've talked to CBN about this to instead close down one bank a week because nobody will notice. If it's 160 banks, it's all over national news. And everybody's concerned. MFBs aren't safe. MFBs aren't safe. All these national programs. One a week. Who cares, man? Nobody notices. In the village they notice, but it's not national news, right? So we're working with CBN on some of that. This idea of compliance, the costs. Yes, there should be proportional costs for compliance, all right? I agree with that. Legacy loans, all right? If they're legacy bad loans your bank made, it's your legacy problem that you got a legacy absorb. I mean, the way you absorb this is current period profits. You provision for those loans. After you've set the provision, you take the write-off. It's not rocket science. It's not rocket science. And if you've got bad problems from the past, well, you've got bad problems with the past and you've got to deal with it. So, like that's, you don't look at breaking out a portfolio, you know, legacy versus non-legacy. It's a nice way to do window dressing, but it still affects the current operation. So, thank you for the time here. Thank you for spending it with me. Take care.
Thank you very much, Dave. Just hold on, Dave. Okay. Okay. We've done a lot of work with Dave and the World Bank, trying to see how we can change some of the narratives for the industry. And we are glad that he's here today and he has shared some of those experiences. We'd like to present an award to Dave for the work you've done. BOT Chair, please you help us present this award while I get it out. Thank you, sir.
Thank you so much. Okay, thank you. Yeah, Mr. Dave Grace, thank you so very much for the wonderful presentation you made this afternoon. And on behalf of NAM, we present this Award of Excellence as the lead speaker for this 20th anniversary celebration of NAM. So thank you very much and congratulations. And give our love to the World Bank when you go back. Congratulations.
Thank you.
Thank you, Dave. Okay. Thank you very much for your attentiveness and participation so far. And I'm sure you are happy that you have been in Uyo in the last few days. Are we good? Are we good? Thank you. We'll take one presentation I'm sure all of us are waiting to hear and know what they have in stock for us. I'm sure some of us got a bit angry a few months ago, and at the Secretariat we are bombarded with a lot of calls. I can't do inward, I can't do outward. They are not responding to me, they are responding to me. Today we have in our midst our dear friend who's been very, very committed to the growth of this sector, and they have pushed several initiatives to ensure that as a microfinance sector, we continue to do well and grow in our business opportunities. Please welcome with me Mrs. Ngova Ihebe Nwankwo, Executive Director, Business Development, NIPS.
while I take her citation. Thank you. Mrs. Ngova Ihebe Wankwo is a strategic financial services leader with a strong commitment to driving innovation, enhancing financial inclusion, and fostering economic empowerment. With extensive experience in corporate banking, financial technology, and payment infrastructure, she currently serves as Executive Director of Business Development at the Nigerian Interbank Settlement Systems, NIPS, where she spearheads strategic initiatives to strengthen Nigerian payment ecosystem. Her career began at Citibank, Nigeria. All right, so thank you. So she just said you can read it up in the brochure so that she can have time to speak to us. Please, a round of applause as we welcome Mrs. Ngova. Thank you.
Good afternoon. I've got an interesting slot, so I'm between you and lunch, and I also understand that there are a few of us that need to go for prayers, and I've said that I'm actually happy for you to go ahead. I'll start the deck. I'll also try and keep it efficient so that I still give enough time, but I believe it's somewhere upstairs that's been designated for those who would like to go up now. So I will kick things off. You know, Eddie and the team gave me a topic. And when they gave me that topic, it was very different from the opening that he shared. So I think I will first of all start by apologizing for the challenges that many of you faced about 2 to 3 months ago when there was a disruption in your ability to access the NIP platform. We have had a number of conversations, and we've also had some forums that NAM put together to explain why we did it. But we've also learned some lessons from that experience, and I do commit and promise that where we need to take such decisions, we will communicate properly and we will work with you. So I apologize. So, just to quickly sort of run through, again, good afternoon, and I'd like to stand on existing protocols if you would permit me, but of course I must acknowledge our regulators, Director Solaja, who's left us, Director Izefe from the NDIC and the NDIC team, as well as the CBN team who are still with us, NAM President, all the EXCO members, and of course my panelists who come before me. So first of all is to congratulate NAM and microfinance banks on 20 outstanding years. I think you should clap for yourself. I know the last few sort of sessions have focused on the things that we can do better, but I think you guys have already done an awesome job, and sometimes it's important to pause, reflect, and acknowledge what you've already achieved. So the topic this morning, and I did have a slide, but it might not come up, so I'll try and just talk you through it. It was about deepening the financial ecosystem safety nets, talking about what emerging threats exist and how you can navigate your way away from those threats. So I think the first thing to recognize, and it's already been spoken to this morning, now we're in the afternoon, is that you really sit at the heart of inclusive finance. And if you looked at the presentation that Dave shared, the statistics clearly demonstrate that you really are at the heart of lives that commercial banks are not able to reach. You're the bridge between informal and formal finance. You're the quiet enablers of small businesses, market women and men, artisans, micro-entrepreneurs. And we acknowledge that today, the bridge is under increasing strain. From digital threats, economic pressures, and systemic vulnerabilities, they all test the very safety nets that are holding this ecosystem together. And so the conversation this afternoon is really about how can we protect that bridge and how do we strengthen it, not just for survival, but for sustainable growth. Eddie and the team have the presentation, so I'm sure they'll post it on the platform for you to follow. And if there are any further questions, please do feel free to reach out. So let me first of all start by sort of setting the stage, the context. The Nigerian financial ecosystem has evolved in the last 20 years. The line between banks, fintechs, payment service providers, microfinance institutions is blurring. It's completely blurred. You almost can't tell where one ends and one starts. And the convergence has not been all bad. It's brought some good opportunities. There's access to new customers, there's faster channels, there are innovative products that didn't exist years ago, but it's also brought risks. The same digital rails that make it very easy to reach customers also make it very easy for fraudsters to reach you, unfortunately. The same open APIs that drive innovation have also become doors for cybercrime. And while the larger commercial banks are able to absorb these shocks, MFBs with smaller balance sheets and leaner resources, you can't always afford the same level of protection, and so you're hit hard. The reality is that our ecosystem, okay, we're finally there. Our ecosystem is only as strong as its weakest link. And if microfinance banks who serve millions, is there a clicker? Let me see if I can get you to. This is a bit about us. I'll just sort of move beyond this quickly. So I'll come back to a bit of it. Okay, let's ignore that so we don't get distracted. I was saying that the ecosystem is only as strong as its weakest link. And if microfinance bank, who serve millions, and we saw from Dave's presentation, right? I think he said 58 million customers. That's impressive. But if you're serving 58 million vulnerable Nigerians, then we have to make sure that there's no compromise. Because where there's a compromise, the ripple effect is felt across the entire nation. So what are these emerging threats? We can sort of put them into two broad categories. The first one is digital and cyber, and the second is economic and credit-specific threats. When we talk about digital and cyber threats, the first one is ransomware and phishing. Across the ecosystem, and I like to say that it's not a Nigerian thing, because often people say, oh, there's rising fraud in Nigeria. It's not about Nigeria. It's about the evolution of technology. And everywhere in the world, we are seeing a growth in cyber attacks. And so, as part of the world, we're seeing our own share of that. There's ransomware, there's phishing, there's social engineering scams, and they're becoming frighteningly common. How many of us in this room have received a message in the last 24 hours about somebody who's ill, doesn't have access to their phone, needs you to just arrange a sharp 10K, 20K? Show of hands? Yeah, so we know it's quite prevalent, right? And the microfinance banks are increasingly being targeted, not because you're doing anything wrong, but it's because you're perceived as being an easier target. You may spend a little less on cybersecurity than larger banks, yet you're handling the same amount of sensitive data. So you're handling customer account data, you're handling information, you're handling personal identification data, and a single breach can erase customer trust. And that's a cost that no balance sheet of yours can easily carry. The second threat that we see is weak KYC and identity theft. we've seen a surge in fraud cases linked to identity theft and weak KYC processes. The fraudsters are getting smarter. They exploit inconsistencies across organizations. So at NIBS, for example, the BVN database sits there for you to validate. And increasingly what we find is, especially when there's a case that we're investigating, once we drill down to check on the account opening history, account opening data, there was no validation of the BVN or even the ID that was presented. And so fraudsters are able to clone IDs, clone BVNs, simulate BVNs almost, but if you're not validating against a live database, then you're leaving yourself open to these threats. So what we're finding is that these guys are able to exploit inconsistencies, they falsify identities, and then they move very quickly across the ecosystem before anybody is able to react, because we're not able to identify these threats. In a sector where inclusion and now digital onboarding is a core goal for many of you, strong KYC is not optional, please. It is foundational. So if I leave you with anything, please, is that you cannot afford to have weak KYC. Whatever it takes, please ensure that you're validating. At NIBS, there are a number of options for your validation. If there are any particular challenges that you're having, please let us know. We work very closely with Eddie and the team. Very happy to get your feedback on ways that we can improve. But it's foolhardy to sort of say, I won't bother validating because X and Y, and then open yourself to serious risks. The third risk that we're seeing is insider threats. And I believe that the director at NDIC spoke about it when she was delivering the paper she delivered. There's this human factor where whether it's malicious, and sometimes it's malicious, but sometimes it's also unintentional, but they can be the most damaging. Sometimes it's a staff that is tricked by a phishing email. Sometimes it's someone who is compromised because of financial pressure. But either way, what we're finding is the result is always the same. A loss of customer funds and a loss in consumer confidence in the organizations. And because internal breaches take months to detect, because these guys are insiders, right? They know what you're looking for, they hide. By the time you detect that there's been an insider abuse, the damage can be extremely severe. The fourth is looking at vendor and supply chain risk. This is one that we are finding is increasingly worrying. As you're adopting digital platforms, APIs, third-party services, whether it's cloud providers, whether it's integrators across fintechs, what's happening is that your security perimeter no longer resides only with you. It's extending. And even if you have very strong controls, if your vendor or your API partner doesn't, you are still exposed. To give you an analogy, it's like locking your front door while your service provider leaves the back gate open and you're expecting that you won't get robbed. So it's very important that you do proper vendor KYC, vendor audits. I was very excited when I heard, I think it was the past president talking about the institution that had been created. And I was thinking to myself that perhaps trading may not be the number one thing that that institution should look at. I would say perhaps that institution should begin to look at what other shared services would really add value. Maybe they vet some of these suppliers. Maybe they conduct or help support testing and standardization so that before anybody within the sector adopts security or technology, you've given a seal of approval. That may be something that you find as value adding. Now, moving on to economic and credit threats, The first one, and I think we saw it already from Dave's presentation, is about credit defaults and over-indebtedness. We're living in the same economy, inflation is high, small businesses are struggling, and so we're finding that micro-entrepreneurs are borrowing from multiple lenders. Whether it's traditional banks, digital platforms, informal sectors, they're all indebted. So it's like a cycle, waiting for when it's going to bust. And so without robust credit data, alternative scoring models, you're facing difficulty in accurately assessing risk. The second one is competition from fintechs and commercial banks. Of course, we see and we know that there's an aggressive movement into the micro-lending space. Some of them are armed with better technology, they have deeper pockets, they have broader reach. They're able to disburse faster, sometimes their pricing is lower, and in the market, they're louder. And so what you find is that for you, you're seeing shrinking margins and your customer churn rate is higher. So what does all of this mean? I've just painted a picture as to what risks you're seeing. It means very simply that the traditional way of operating is over. You can no longer afford manual processing, sliced data in silos, limited technology adoption. You just can't. You can no longer sustain that within the sector. To survive and thrive, you have to adapt. And so the good news is, if we can look at how to deepen the safety nets, and I'll talk about it in two ways. The first one is we talked about the risk in two ways. We had digital and we had economic. So let's focus on digital first. The first thing is investing in basic cyber hygiene. So a lot of the times I hear people say, it's very expensive, I don't have liquidity. We know, we understand that. But there's some basic hygiene things that you can do. First one is you must have multi-factor authentication. People who are logging into your systems, who are accessing your data, they should not have single sign-on. And it's very easy. There's so many channels. So please, that's number one, first step. And doesn't cost a lot of money to implement. It's just to ensure that whoever is going to access, it's like imagine a safe. You know, the safes of the old days, they might have combinations, but they would also have a key. That's really the way to look at it. It's just making sure that whoever has access, it's not just a single access channel. They're having to authenticate themselves. The second thing is you need to have enterprise-level monitoring solutions, like a fraud tool. You're required to have some sort of EFM, because the reality of it is that the human eye cannot always catch what's happening, but the tools will help you to catch. And at NIBS, we do have an enterprise fraud tool that's available to the entire ecosystem. A portion of it is actually free, and there's a paid part, but I have encouraged that every MFB should at least access the free access points. At least it gives you a little more data than you would have had. The other thing I wanted to sort of highlight when we look at sort of cyber hygiene is that I'm always, told that it's too expensive to invest in cybersecurity. I'd like you to look at it as insurance. Don't look at it as a cost. Think of it as insurance. You pay premiums because you're hoping that in the event of a risk, you're protected. Think of your cybersecurity spend in that same vein. The other thing to speak about really quickly is about your KYC and data protection. The Nigerian Data Protection Act is meant to help you strengthen your KYC processes. Please read the act. There are very strong penalties. And I'm sure after you've taken the time to get deposits, to grow your balance sheets, you don't want to lose it all with one fine. Better KYC means safer customers, fewer fraud incidences, and better trust. The third one is mandatory and continuous security training. Again, thinking back to the shared service company that you've built, one of the things that we see that is needed in the ecosystem is awareness, training, certification, re-certification. This again may be a way that you can lower cost by putting investment behind this company to do that. We also have a training school where we offer various programs. We're happy to collaborate with you to find ways to bring that cost, but you must invest in cybersecurity training. And then please invest in trusted digital platforms. When you choose a digital platform, ensure it is certified, it is reliable, and it is regularly audited. A cheap solution today can become a very expensive problem tomorrow. Invest in platforms you can trust and partners who can grow with you. I was very happy when I heard Director Office talk about GSI, because we had a meeting, I believe it was last year, January, with Office, talking about expanding access to GSI. And since that meeting in January, we've had about 4 meetings to date with various departments within the regulatory arm. And we do see that they're working through how it will happen. So I was excited to hear his commitment that it's going to happen. It is a very powerful tool. It will allow you, when you have access, to recover delinquent loans. But there is a responsibility that you have to play before you can access that platform. So I will ask that perhaps in preparation for access, you go and look at some of the prudential guidelines that guide lending activity. Look at CRMS so that you can prepare yourself, because you will need to access CRMS. You would need to ensure the loans that you're granting are in line with those before you access GSI. The second one is about credit scoring models. I think you have to think differently about data. Your customers leave footprints all over. There's mobile use, there's payment behavior, transaction frequency. So I would suggest again that you begin to partner as a collective. I saw one of the institutions that provides, I think, a lending platform a few weeks ago announced that they would give institutions free access to the credit bureaus. Again, I think it's things like collective bargaining, when you can go to the credit bureaus and say, look, treat us differently. We will come as 200 or 300, lower our access costs, and this is the kind of data we want to see. I think that's where you would see a lot of progress. You have to make sure that you have the insight. Otherwise, it will lead to exposure. The third point is collaboration and shared infrastructure. So it's interesting that I've also have seen that through the thread. There isn't a single MFB, in my view, that can carry the full cost of digital transformation. And that's where you have to collaborate, because that helps you bring down the cost. It helps you spread it. It helps you go further. And I think that through shared platforms, so fraud monitoring, training, cybersecurity, assessments, and even pooled technology investments, you can achieve economies of scale. The idea is not about big tech. It's about smart tech. When you're using technology appropriately, you're sharing it collectively, and you're managing it securely. So where do we go from here? We have to make deliberate, collaborative investments in technology, no matter how small. We need to train our people. You're only as strong as your weakest link. You need to strengthen your KYC. You need to know who is banking with you, who is depositing with you. That's the first step in ensuring that you're not opening yourself up to fraud. You have to demand higher standards from your vendors. And of course, we encourage you to join the shared networks that NIBS provides. We're all connected, whether it's banks, MFVs, fintechs, consumers. One weakness is a risk to everyone. And so as I close, and I was thinking about sort of, what really is microfinance? In my mind, microfinance was never about big profits or big structures. It was always about big impact, creating an opportunity where there was none, bringing the financially excluded into economic inclusion, and enabling dreams even in the smallest areas of our economy. And for me, that mission should remain sacred. But that dream without protection is unsustainable. We have to build institutions that are resilient, that are secure, and that are enduring. I assure you that at NIBS, we remain committed to supporting the ecosystem. We might not be able to change everything from day one, but we're always here to listen, always here to collaborate. And I think the thing I'll leave you with is we recently launched a banking application called Ncube. And one of the reasons that we launched it was because there was a worry that the